all the seats, use all the microphones. DeFi, over IBC. Bring up to the stage now is Emery, Dean, Brent, and moderating for us is Zaki. Guys.
All right. I'm Zaki. I'm the co-founder of Sommelier Finance. I moderate this panel. Sommelier is also a Cosmos DeFi protocol. Very similar in many ways to Nebula. We are much more focused initially on EVM DeFi, but we are building a platform for strategists who can sort of help optimize yield on behalf of users. The sort of actively managed space is like definitely a theme. But we have 3 other builders of Cosmos DeFi. So you want to introduce yourselves?
Yeah, pleasure. Emery, Andrew. We're building Kado. Kado, payments infrastructure for Web3, via on-ramps, payment solutions, and infrastructure.
Check.
Access to and utility for.
Mic check. Yeah, that's good. Mic check.
1, 2, 1, 2. Is this any better?
I'm Dean. Everyone here? So I'm Dean Tribble. I'm CEO of Agoric. We are building a layer 1 Cosmos-based chain to enable programming smart contracts in JavaScript. So to make programming smart contracts available to millions of developers out there. But the first release, come later this year, is a stable token that can consume the capital assets across the Interchain as collateral and produce a stable token that's available across the Interchain to the likes of Osmosis and Juno and all these other chains. That's what we're doing.
Hey guys, I'm Brent. I'm the founder of Umee. Umee is a cross-chain DeFi protocol that interconnects between Cosmos, Ethereum, and other networks. We're building out a suite of DeFi tools and then we're growing the money layers ecosystem. We're putting a heavy focus on longevity, so different aspects of DeFi protocols that use lending, collateral, as well as future forms of debt issuance based on debt capital market frameworks. And just looking forward to building in the Interchain and figuring out how to connect with all these other great protocols out there.
So I think like one topic, one thing that's like topical to talk about, sort of for DeFi in Cosmos, or sort of actually really the top of the mind thing is there's a void now in the stablecoin ecosystem of Cosmos with the collapse of UST, which was the dominant sort of stablecoin in the Cosmos ecosystem to many of our great pain. But now there's a void. And so I'm just curious how you guys are thinking about this. Like I would start with like, because like as a fiat on-ramp, I'm sure you would probably, your product is primarily going to be on-ramping people into some sort of stablecoin.
Yep, exactly. So originally we actually were able to on-ramp UST directly into your Keplr wallet or Osmo. Unfortunate, obviously, but now working with Axelar, we're super excited. We're actually going to launch the first on-ramp and off-ramp between the bridge and IBC coming pretty soon. So keep your eyes out.
So your initial stablecoin is going to be bridged USDC.
Yep. Tether as well, DAI in the future. But yeah, mostly focused on the stablecoin aspect. But then take it even further. How can you swap directly into Osmo? How can you, go in and do these interchain activities? Buy an NFT with a stablecoin, or and again in our liquidation, these sort of direct-to-action capabilities where traditional on-ramps today aren't really interacting with smart contracts and not interacting with bridges. How can we create new possibilities with the fiat on-ramp and again more easily onboard your friends and family into Osmosis? I mean, it takes 5 days to wait for funds to settle from your Coinbase account to actually get access to and send over the Atom token, usually the main starting point. But obviously, USDC as soon as well, their own native solution on IBC. But until then, working with the bridges and stablecoins that we can get access to.
Cool. How does Inter fit into the stablecoin ecosystem?
So there are the account-backed stablecoins like USDC that people use that are very valuable as a reference currency. But we have in the Interchain, we've got tens of billions of capital assets, Osmocon and Kado and so forth, that if we can use them as collateral with the appropriate CDP style mechanism, then we can really unlock a lot of value and enable a lot of commerce, right? Economies grow because they've got the grease of a good stable currency for them to be able to grease the wheels of exchange. Okay. And so that's what IST provides, is I can bring capital assets over IBC from all of these different chains across the cosmos and the rest of the interchain world over to the Agoric platform, Mint IST, which is for the inter-stable token, bring it back to all these other markets, bring it back to contracts in Evmos, contracts in Juno, things on Osmosis, etc., loan programs and so forth, and use that as a stable currency that works across a wide variety of chains in the ecosystem.
Yeah, so I think gives a perspective on kind of how we look at this stablecoin ecosystem. So, I mean, listen, USD collapses. There's no fun for anyone. Like somebody saying a stablecoin like losing 99% of its value in 2 days. And we've been like kind of researching decentralized stablecoins since just early days. MakerDAO actually, so MakerDAO with DAI, they actually encountered a similar situation back in Black Jersey in 2020, March 12th, when the price of ETH dropped pretty precipitously. The price order that they were using wasn't able to properly allocate price information. Gas costs were like through the roof, so everybody was CPs, and there was a situation where DAI was collateralized. Emergency measures were taken on the protocol, and VPCs were able to help save the protocol. And lessons taken from that instance really showed a bit of an anti-fragility when it comes to different stablecoins like that. And also subsequent to that, March 12th crisis, MakerDAO started to introduce global assets into their collateral. So, we kind of view an ecosystem that uses pretty reliable stablecoins that are tried and tested, and we want to figure out how to introduce those into Interchain to be used for different forms of DeFi across this ecosystem. Yeah.
So there's the money in the account-backed stablecoins, and then there's the over-collateralized stablecoins, and then there's the algo things. The collapse recently, the collapse, that was an algo that was economically, unsound. Whereas the CDP model of MakerDAO is something that allows you to have volatile assets on one side and come out with a stable token on the other end. That model is indeed well proven by Maker. Turns out it's been replicated, and the fundamental thing you need for that is efficient liquidation. So the MakerDAO struggle back in was because the liquidation pipeline wasn't able to keep up with liquidation. That's very different than unsound economics. That's just mechanics and engineering that they basically solve. Right? And other groups have solved it with the same kind of technology stack. And so that means we've got a sound approach to doing a stable currency, a stable token that is based on assets from chains that have volatility. And so, indeed, taking those lessons, one of the lessons is that's what we need to do. And we can leverage all of the work that they've done, both technically by standing up a stable token that is more native to the Cosmos ecosystem, but also by bringing over DAI bridges and having that as a reference that we can still rely on leverage. I mean, there's a non-trivial advantage in there being more than one stablecoin to be used.
Probably worth mentioning too, there's no native stablecoin to MEC yet, so obviously that's coming soon too.
That's the goal.
Well, one piece of this that I think is so, you know, thus far Cosmos IBC is like Cosmos DeFi has mostly meant DEXs, right? It's mostly meant like we have DEXs. We have DEXs of various kinds. We have so many DEXs. We're at a conference of the DEX that sort of launched IBC. In the wider crypto ecosystem, DeFi is so much more than this. It's perps, it's stablecoins. How do you guys think about, this sort of expanding maturity and scope of Cosmos DeFi? Where do you think all this stuff is going to go? And does, for instance, does Kado think of themselves as something that will be used by the front ends of different DeFi apps, or is it like a DeFi app itself?
Yeah, I think we think of ourselves more of an overlay, plugin that connects the fiat rail to, a protocol, to a use case, by NFT or, borrowing these use cases that the Interchain has such a great model for. Obviously, it's harder to do this cross-chain, or I say, do this on cross-chain than it is with Interchain, and the benefits and protection there to make it all possible. So, I think it's going to be about building those resilient systems, building user interfaces that are accessible or easy to understand, that obfuscate a lot of the complexities of IBC. So, build on top of or really, moving into applications and creating, utility beyond just the single use case, and then create a real application, real connected application.
Yeah, I like your point about, Cosmos right now, sort of mostly DEXs. What we really need is an economy, and DEXs are a huge important part of that. On-ramp is critical for maintaining connectivity, but the key thing is there isn't a right answer. There's an evolving answer. As the market grows, as we add richness. I think that the key market institutions that everyone's going to rely on need to be extensible in such that when perp markets come online, they, as another mechanism for providing, economically sound stable currency, can be added in. So that's another way people can come in and reduce the required over-collateralization, increase the economic efficiency while still having a sound currency. Similarly, we've got insurance markets, working with partners to get insurance on Agoric. People would like to be able to buy insurance for their underlying assets. So instead of the native DAO for a smart contract to cover their insurance, they'd like a financial institution that provides regulated backing. It ties into the multi-trillion-dollar insurance industry so that institutions or pension funds or these kinds of things can now participate in DeFi. So I think, to me, the extensibility, the ability to start from the CDP model that is battle-tested and then carefully, with appropriate debt limits and appropriate controls, grow it to add new mechanisms as we bring richer kinds of commerce and economics to the Cosmos ecosystem. I think that's going to be pretty critical.
Yeah, and I agree to those points. I think there's a lot of really important infrastructure being built right now. And I think the earlier point, like Cosmos, is all about DEXs right now. It's kind of true. And I think DEXs appeal to a certain mindset that is more focused. Think of like an equity trader, or maybe like a foreign exchange trader. Looking at DEXs really activates that part of the brain when it comes to understanding this type of environment. I think the missing piece is really this other mindset, which is kind of the fixed income, like debt, like bond and lending, like bond ecosystem. And with equity, it's kind of you're taking approaches to volatility, price movements. With debts, with borrowing and lending, you're looking at lending and capital allocation to different groups. And so from the Umee perspective, we're very interested in in bringing the bond markets to crypto. We're interested in taking different approaches. Technically, Aave, Compound, MakerDAO, they've already done a good job of setting the foundation with variable borrowing lending, adding things like fixed rates, adding things like different duration of term structures. I think these are going to be some of the things that really tie crypto together, especially in the evolving Cosmos space where everything's, listen, Cosmos has got the best, interoperability protocol in IBC. No other crypto ecosystem out there is anywhere near as efficient as that.
I think that, following on that, this is more general about DeFi, is that in order to have cross-chain DeFi, you really need an economy is wired together with a currency, right? And there can be multiple currencies. Obviously, the world economy has multiple currencies, but U.S. dollar is just an algo managed coin with long-term mortgages and long-term contracts that provide a stable price because it's tying the value of this thing to economic activity that people engage in. And we want to leverage that. Right? We want to leverage that. And so fiat on-ramps and that sort of thing give us that. But it's having that kind of economic glue that works across multiple chains will be a big element to enabling app chains that are not a DEX, app chains that are specific things, to be able to easily participate with the economic activities that are on that people are building in smart contract platforms or on individual app chains. And so that's actually, some of what allowed DeFi summer to happen was we got the Greece for Commerce in there, right? We got DAI, we got USDC in there, and that let people start actually doing business with each other. And pricing things so you can compare things instead of every single transaction being a foreign exchange computation. And that's just a huge element to give us growth room in the Cosmos ecosystem to let DeFi forward.
I think one of the other pieces of sort of Cosmos DeFi that is potentially is coming together is the whole idea of staking derivatives. It's a big thing that I'm working on for Adam. How do you guys think of staking derivatives sort of sitting in various ecosystems?
I can speak to that quickly. So staking derivatives are another critical way to unlock the value that is in the staking assets, the capital assets that are on all these chains. From my perspective, by themselves, that's just the beginning, right? Unlocking it, you got to have a place to take it to participate in an economy. So I think that staking derivatives will flourish when it can be connected up to, for starters, exchanges like Osmosis and Press and so forth, but then bring it over and borrow against it in Agoric or in Umee or in any of these other platforms. So it's a seed. But the growth is from being able to rapidly build more interesting economic abstractions and have them work with each other.
Yeah, we want leverage staking. I think that's going to be awesome. Being able to use a staking derivative.
Explain what leverage staking is.
Leverage staking is where you can have stake atoms, use it as collateral, and borrow normal atoms, and then stake those again. So here's the thing about leverage staking. Ethereum, unfortunately, has not done this very well. Look at Lido. Staked ETH from Lido is trading at 9.97 ETH per moment. The value's been decayed because there's less confidence in the ability for Ethereum to get to conversion time. Every day the merge is delayed, it actually results in a lower value for staked ETH, which is not very good for the people who want to use staked ETH in digital economies. But the cool thing about Cosmos is that if we have staked atoms, I'm pretty sure one way or another people can unbond them within a 21-day unbonding period and get their atoms back. Unlike staked ETH, which requires waiting 6 months for the merge. So I think
Merge isn't going to give people withdrawals.
Then 6. Yeah, imagine a discount. So I think Cosmos has this significant advantage when it comes to staking derivatives, being able to use them for leverage staking. So, that's tough, man. Merge.
Yeah, I think this, I think what Brent was pointing to, like we are imagining now a world, coming this year in Cosmos DeFi, where you can liquid stake your atoms, take them to Quicksilver, get a synthetic state atom, take it to Umee, leverage that, or take that to, or take it to Agoric and leverage that, and then recycle IST against it, all these things, right? So I think the biggest thing that is sort of coming together is this idea that Cosmos DeFi was harder because you couldn't just do exactly the same things that were done on Ethereum. We have to make our own version of everything. But it is just it is honestly coming together. And the DeFi exposure that we started with Osmosis now is sort of expanding out the Cosmos. See what else? I think we have 5 minutes.
We don't have 5 minutes.
Cool. I have no idea what the plan is. Cool. We're all good. Thank you very much.
Thank you for having us.
Thanks, everyone.
Another round of applause for Zaki, Emery, Dean, and Brent. Staking, liquid staking, superfluid staking, leverage staking. Forge your nail to the edge, because that's where we're living. Next up on the Osmocon stage, Alpin, come on down. Alpin's going to talk to us about transaction fee abstraction. That seems like a complicated thing, Alpin. I need you to sort it out for me.
Yeah, it seems like a lot of people are out for lunch. I'm really glad I didn't wear the Washington mascot. It would have been really awkward. So today, we're going to talk about transaction fee abstraction. Before we spend any time thinking about something with so many syllables in it, we first have to understand why. I'm going to do a little test for this clicker. It works. So we're going to start with a story. As all good stories start, our story begins with Alice and her trusty companion, Bob. Foreshadowing, Bob will not be able to fix this. So Alice has dollars, and Bob is, for the sake of this story, imagine he's in Europe. And she wants to send Bob these dollars. And right when the dollars are in transit, Alice hears from behind her, freeze, hands up, it's the fee collector. And Alice turns around and says, I have to pay fees for this? And the fee collector says, of course you do. And not only that, but you have to pay the fees in euros. Alice looks at the fee collector and says, my guy, what is a euro? Now, the fee collector says, it is your debt. Alice checks her pockets and realizes that she has no euros, and it's all over for Alice. She comes to an idea. She says, what if I pay my fees in the token that I'm sending to Bob? And this is not something you would see in traditional finance. If you were to try to send a wire transfer to Europe, they would let you do this. But the fee collector in this case says, sure, I'll swap your dollars for euros, and everything seems fine for a second. Then the fee collector turns around and says, if you pay me a fee in euros, and we're back to step one. The biggest issue here is that if you see on the left side here, Alice has to deal with all of these issues, even though she's just trying to send money to Bob. And you can replace this send transaction with anything that you have to do on-chain right now. This is probably one of the biggest issues that we have with on-chain UX, is the fact that these heterogeneous transaction fees exist. So, to understand how to solve this problem, we first have to understand why transaction fees exist. Are we allowed to ask questions to the audience here? Can someone, Scott, do you want to tell us why transaction fees exist? So Scott says cyber resistance, which is a different way to say protection against spam. It's right. I mean, it's one of the reasons. So the best way to see this is what happens when we remove transaction fees. So let's say Alice tries to send her money to Bob, and it works. Everything seems fine. Now take the case where Alice is evil, and instead of sending money to Bob in one transaction, she wants to wreak havoc. So she splits it up into 10,000 transactions. Bob receives the same amount of money, Alice sends the same amount of money, but the chain collapses because this load is too much for it to handle. It's too much spam. There's no cost for Alice to attack the chain in this way. A different way to phrase this is, let's say Alice is not evil, but Bob has something really valuable, and Alice wants to buy it from her. Bob turns around and there are a lot of people who want to buy it as well. There's no way to prioritize these transactions. There is no fee market. There is no transaction fees here. So again, everything spams and collapses. So if we can't remove fees, then what can we do? We're left in this predicament where on a sort of general purpose chain like Ethereum, you kind of hit a wall. One example, this is where you can introduce the topic of transaction fee abstraction. If you pick apart the words, it means we're abstracting away the concept of transaction fees. We're removing it from the user experience. This is something we have already implemented with Osmosis, and it's something that we're going to be expanding, and we'll get to that in a second. The question that we're going to answer is, what if we could pay the transaction fee with the token we use in the transaction? This is the same hunch that Alice had in the first example. This is basically what it would look like. Alice and Bob are the only two parties involved, and the fee that's paid is paid out of the initial transaction payload. The real question is, how do we convert this into the gas token? So, option number one, I don't know if we have any validators in the room, many of them would probably cringe at this, is turn validators into exchanges. Say to validators, accept USDC and swap it into the gas token off-chain. Just figure out how to do it. The biggest problem with this approach of making the validators accept all these different kinds of tokens is that now the system is inconsistent. Validators need to maintain their own price oracles. And more importantly, you have this issue with validators being forced to become market makers, to become exchanges. And this is not what they signed up for. So it's an undesirable setup. The second option is a bit less interesting. It's private relayers. This is basically the only viable option that exists on something like Ethereum right now. Where basically you send the transaction fee into a private relayer, which will then pair it with someone who wants to sell their gas token. This is not exactly how something like CalSwap works, but it's, for the sake of this analogy, it's a close way to explain it. The problem with this is uptime. What if there isn't someone who wants to sell the gas token at the exact amount, at the exact size that you want to? And also, in most cases, not all, but in most cases, it requires relying on a third party or some form of centralization. This is a huge problem because it can upend the security guarantees, especially if you're tying it into the chain layer with transaction fees. So the final option that we're going to consider is a chain integrated DEX. And this is the simplest option. You say a transaction fee comes out and the chain knows to just swap it into the gas token in a way that is entirely non-custodial, doesn't rely on any third party other than the chain, and does it in an efficient way by batching the fees together. So this actually works, and this is probably the most efficient, sort of least loss approach to solving this problem. So thank you for nodding. It's a viable option. A couple notes are that we have to batch the fee swaps together. Otherwise, every single transaction has to be swapped. We have this unbelievably rare characteristic that everyone is searching for in the space, which is that all the value that is created is captured. And this is not the case for almost any feature that one might implement. As the pie grows, all of that value is funneled directly back into the base token of the chain. It also, in the case of Osmosis, enables the sea of features and products that Osmosis can launch as a backend infrastructure. The front end is great. We have one of the best UXs of any DEX or DeFi project. But the reality is that a lot of the volume in traditional financial systems and for centralized exchanges happens in the backend. As a financial service provider, Osmosis can target a much larger market. And obviously, it's much higher volume and fees for Osmosis LPs, which we always want to optimize for. But there is an issue with this. And can anyone point out to me what the issue with having a DEX on a chain is to process transaction fees? I don't actually expect an answer. The issue is that it bakes in an assumption that there has to be a DEX on every single quote-unquote app chain. You might ask, does that not defeat the purpose? If every app chain has to have a DEX plus their app, then it's not just an app chain. And there is some truth to this, that because you need the DEX to be at the chain layer, you're fragmenting liquidity, and there has to be a DEX on every chain, unless, this is the intro of the actual conclusion of this. The solution to there needing to be a DEX on every single app chain to have this sort of fee abstraction is for transaction fee abstraction to be offered as a service by a DEX chain to all other chains. The way that this is done is on an orange chain, the fee tokens are sent through IBC to Osmosis. Osmosis sends the gas tokens back. It is really as simple as that. And we can batch these tokens together to avoid gas issues, and Osmosis can send price feeds through IBC as well. There is some nuance to this. But the bottom line is once Osmosis launches this transaction fee abstraction as a service, no chain will ever need to implement a DEX into their own base layer just to be able to abstract away transaction fees. So this has the bottom line benefit of better UX, in fact, a new dimension of UX for all app chains, not just Osmosis, organic value accrual for all app chains, not just Osmosis, and it sets up a situation where users of other chains and other applications never have to touch Osmosis, and yet that value of higher volume and fees still accrues to Osmosis LPs. So the end state of all of this is that the transaction fees are abstracted on all chains that want them to be abstracted. If you have a gain chain and you don't want your users to be paying fees in the base token of your chain, but you still want to accrue the value of the activity on your chain, you will eventually, once we launch this, have a way to do that without integrating a DEX into your chain. Oops. So the power by Osmosis will be the way that transaction fees are run through the Cosmos and all tied in app chains. All right. Thanks for your time. Do you have any questions for us? All right. I think we're good, unless someone else asks a question. Cool. Oh, I mean, so basically this feature has already been implemented in Osmosis. So you can right now pay your transaction fees in any token on Osmosis and it will go through just fine. We're in the process of adding it to the Keplr UX and basically making this a part of the core user experience for Osmosis. As for the cross-chain fee abstraction, this is actually not a particularly complex thing to implement. It was a question like whether it warranted a whole talk at all. I think it's almost trivially easy from a architecture standpoint. The key issue tends to be integration. So as other app chains launch their features, as other app chains launch their platforms and garner users, and there is a larger market for this, then they'll come to Osmosis for this integration. So we have our sort of priorities and our roadmap, but this is basically already implemented on Osmosis, and it will be implemented at the pace of app chains that need them for the rest. Yes, Scott.
So this basically operates with kind of like blindness assumption of like PC and
Yeah, so there's an implicit liveness assumption here. You can get around it if you have a fallback price oracle for a chain. Basically, the liveness assumption is that Osmosis will not, for example, be offline for people to collect transaction fees. But if you know what the price to collect the transaction fee is in, then you can basically just treat it as a super long-term batch, like a 2 or 3 day batch. Yeah. All right, I think we're good. Thanks, guys.
All right. Another round of applause for Mr. Alpin. Where'd he go? I can't see it at the end here. I learned a lot. I love Bob and Alice. They're like my favorite characters of all time. Next up, on the Osmocon stage here, wait, who's Luca and who's Lexington? Luke. Wait, they misspelled your name. You're just Luke. You're not even Luca? All right. Let's start over. Refresh. Next up on the Osmocon stage is Luke in Lexington. Here, I'll hit you guys up with the mic.
All right, cool. Hey everybody. So I'm Luke. This is Lex. We're going to talk a little bit about our project Phase today and how we're going to be automating investments on chain. So just a little bit of background first. I've been in crypto for about a year now. Was working on a few projects in Terra. Now happily transitioned to our Cosmos.
I've been in the space for about the same time, been a contract dev for around 6 months now, and this is the latest project that I'm excited to bring you guys along with.
Cool. So getting right into it, the problem we're trying to solve here is that retail investors are not great investors for the most part. The majority of investors are not able to successfully carry out active investment strategies. We know that on a good year, the stock market will return about 6% on average, whereas this stat here says the average investor only earns about 4.25%. This basically boils down to people thinking they can beat the market, taking up active strategies rather than just buying and holding, and a lot of times reacting based on emotions and investing. This one better? Alright. Cool. Yeah, so people will tend to react and trade based on emotions and speculation and lose any sense of their rational investment. If you are a long-term investor, the easiest route would be to just buy and hold. However, there are better strategies that exist, such as the DCA, VA, grid trading, any sort of strategy that will help you reduce your cost basis and get a better price for the asset you're going for. The only thing is these strategies will typically require a little bit more work. So the solution is to automate these processes. So our sort of main mission in breaking it up into parts for Phase would first be to leverage the various solutions that exist or that we would come up with to allow for scheduled smart contracts on chain. Then we would offer various strategies. First will be the DCA, and in the future we could offer VA, grid trading, other things. And then on top of those, leverage all the cool and fantastic DeFi strategies like lending and LP, providing liquidity and staking to offer some extra yield on top. Cool.
So you might be wondering, why do we want to actually do DCA on-chain? And the main reasons are for decentralization and the utilization of DeFi strategies. So I don't mean to preach to the choir. Preach to the choir is what I was trying to say. So centralized exchanges, they're the easiest route for newcomers. All you have to do is put in some identification, get a card up, and you're ready to trade in no time. And it's really easy for making DCA and recurring investments, but you have to KYC, which is more of a problem for some people than others. And since it is just on a centralized exchange, you aren't going to have access to amazing yield that certain DeFi protocols could give you. So when you move to a decentralized application, first you don't have to deal with this KYC, and you're also fully on chain, so you're able to really easily integrate with other amazing DeFi protocols that could generate you a lot of yield. And so let's say you're a user who wants to use your protocol. So you deposit a certain amount of money with us, and we get that as a lump sum in the beginning, and immediately we start lending it out or doing some sort of strategy to generate yield on it. And then as the time comes, we will automate certain swaps on time periods based on the user's specification. And then after that, the resulting token, if eligible, will also be lent out or use another strategy in order to generate yield on that as well. That way, all the time, you are generating yield on your assets. And you can use other strategies like providing liquidity, staking, leverage, and also in the future, we're thinking about adding a governance token which would allow people to incentivize swapping into a specific token because we could reallocate certain yield to a specific pair if someone wants to encourage their token to be invested into. And so you might be thinking, how are you going to do these time-based executions? Because, you know, when you're going to sign a transaction, you actually have to sign the transaction. And if we're going to have, say, tomorrow we have 5 transactions to sign, you're not going to have one person click that transaction over and over again. Otherwise, you're pretty much defeating the whole purpose of making it easier for the user. So we go from most centralized to the least centralized solutions. The first solution is off-chain bots. This is one that's a really solution. You know, you have an off-chain bot, you're running an AWS VM that says every X time, this person has a trade that has to be executed. That's not a great solution. Nobody wants to decentralize application to fully be dependent on a VM operating correctly. I mean, that defeats the whole purpose. The next solution is bounties, where we would aggregate transactions and say a user could come through, take these groups of transactions and execute them. And for executing these groups of transactions that need to be put through, they get some sort of reward, either a governance token or some sort of just token reward for them. And the other thing we're also looking into is epic queuing, or epoch queuing. I always mix those two up. With epoch queuing, it lets users, part of the Cosmos SDK, queue transactions, and this is the best way to do it because, this is one of the best ways of thinking about doing it because you can use block height to determine when a transaction will execute that, and you can translate that into a specific time based off of how frequent the block height or the block emission is. And so in the current stage of development, we're currently looking for the best solution for the scheduling problem. We also have started construction of the Cosmos and smart contracts, and we're also here planning integrations and looking for collaborations for other DeFi protocols who would like volume through us for generating yield for our users.
Sweet, yeah. So when we look towards the future and our vision for this product, there's sort of 2 ends to it. First, the B2C. This is the product that users will see as our front end. They can come and use our app and leverage all the different strategies we offer in one place. The other end would be the B2B, or more of a software as a service product, which would be integrated with other apps front ends. And so we would combine these 2 ends into Phase as a whole, where we have our Dapp and widgets on other platforms. So users can use Phase in these 2 ways, either on our front end Dapp or through third-party front ends. First would be Osmosis itself. And the structure of Osmosis is, actually facilitates this very well, given its vertical integration and support for such a seamless user experience. It sort of creates a very seamless structure for this 2-ended product here. So when we talk about some additional strategies that Lex alluded to earlier, when it comes to swaps, there's a few other things we can do besides DCA. First would be a value average strategy, which would be fairly similar to the DCA. The difference being we would be making the amount swapped based on the percent change in the token price since the last swap. Another could be grid trading, where we set multiple buy points and sell points as the token price fluctuates. And then we could do a completely open strategy where users define all of the metrics they'd like to trade on. And then when it comes to different yield strategies, we could, for one, provide liquidity. This could come from the actual tokens that the user is swapping. And so as they start to swap more into the token they want, they would actually have more they could LP as they get closer to a 50-50 split, and then back down as they get further out. And then actually leveraging the superfluid staking of Osmosis, we would be able to create leverage by using those LP tokens as collateral to borrow some other tokens and lend them out, generate some leveraged yield there. And then getting into some possible tokenomics if we were to do that. First, obviously, launch our token. I think the model that would sort of fit best would be something similar to the curve model with the gauges, except perhaps take off the vote escrow. Basically, we can incentivize certain lending pools with an extra boost with our token emissions, and these emission distributions are voted on by the governance token holders. Cool, and that's it. So if anyone has questions, feel free. Yep.
About the pricing models, are you guys aware of spot pricing on AWS?
You spot pricing on AWS.
So essentially what you can do is you can say, this is the minimum that I'm willing to pay. And when demand dips to that level, is when your function executes. So basically, you execute when there isn't enough congestion or traffic. So essentially, you're buying the spare capacity. You could potentially do something like that. It's different than bounty-based pricing or epoch-based pricing, because what you can say is, I do want to get this done, but only at this cost.
Are you suggesting that would be like a VM that's monitoring this price, and once like a certain threshold is hit, that it will execute it? Yeah, that's something that would be interesting. But the one thing that we are a little weary of VMs is, of course, like with a decentralized application.
Doesn't have to be a VM, but it could just be a mempool where you say like, this is my price. This is what I'm willing to do it at. But only execute it if I can get the whole thing done for, say, I don't know, $10.
Yeah, that's interesting.
So it's the other way. Like, obviously you can pay for when there's higher congestion, you pay more, fine. But what they built is, I want to get this video file transcoded, but only if it's cheap enough. So it's the bottom of the floor. It's an interesting one. It keeps enough capacity going at times when nothing's happening. And so yeah, it's just price, like distinction, I guess.
Yeah, we'll definitely look into that. I appreciate the suggestion there.
I'm sure this is something you guys thought about a lot, but how do you prevent every single VC from being front-run?
That is a good question. Lex, do you have any idea about that?
For protecting the DCs from being front, I guess we want to think of a way to keep it on-chain. I know that Osmosis does have plans to integrate ways to protect MEV by using encryption in the mempools. Likely we'd want to utilize something similar such that these transactions are not going to be able to be easily predicted and ran like that. We haven't had a certain fleshed out plan, we don't have a very distinct fleshed out plan for how to deal with that. That's something down the road that we'd think about seeing how Osmosis deals with it with encrypting the mempool likely.
Awesome. Thank you guys.
Take it away, sir.
Thank you. Hello, everyone. So, as mentioned, my name is Jack Purdy. I am heading up business development for Messari's protocol services, and I'm here to talk about stablecoins. Click.
This remote is not working. Huh? Clicker is not working. Just 1 second. Yeah.
And that's my presentation. Thank you. What do I do, Cody?
I don't know, just...
Yeah.
Whoa!
Hey, there it is. Okay, so to provide some context why there's a BD guy from Messari here talking about stablecoins, a little context. So Messari as a whole, so we are a crypto market intelligence platform. It's kind of two sides of the business, the enterprise, traditional sort of financial SaaS product, and then protocol services, which is really my world and kind of what brought me here, as we've worked with Osmosis on that front. And so more specifically, like what is protocol services? Kind of like an outsourced investor relations research type function for DAOs, where we'll spend a lot of time going through on the data side, building out like a protocol level income statement to standardize major KPI fundamental metrics, and then provide the research layer on top of that to better contextualize the data. So recently we did a Q1 report for Osmosis, and that's kind of what I'm here to break down, and then with the specific angle around kind of what's going on in the stablecoin world for Osmosis. So starting off from kind of like the macro overview, looking at just like aggregate DEX volume, you can see that volumes really started picking up once Luna and USD kind of kicked things off, as that was like the first stablecoin in the ecosystem. And that's because like having that base pair is really like pivotal in any exchange ecosystem, as that's what most traders naturally want to like trade in and out of. And then as that ecosystem continued to grow, there was just a lot more assets in this universe with which to trade. So you can see, volumes really started kind of like taking off with the growth of crypto as a whole, but then also the Luna ecosystem, and kind of topped off right around the state of just like the top of the crypto markets, because again, once valuations collapse, less trading activity as to be expected. But then that ever so pretty spike up there, which we all know from the USD blow up. So I don't need to go into that too much, but as you can imagine, when there's a lot of money on the line and people are trying to get some liquidity on their assets that are quickly falling to zero, there's a lot of trading volume. And then since then, it's continued to kind of veer lower because there's been this like big absence now of that base stablecoin in the ecosystem. So looking at liquidity kind of tells like a similar story where rises pretty rapidly with growth of Terra and then sharply falls off a cliff. But what you can see towards the end there is the beginnings of increased liquidity from these ERC20 stablecoins that recently been introduced with the Axelar bridge that's now allowing USDC, DAI, Frax to be able to be traded on Osmosis. So drilling specifically into some stablecoin metrics. So for fun look at history here, Osmosis actually started having a Euro stablecoin, which kind of comprised 100% of the volume until we finally got a USD one. And as to be expected, USD reigns king and comprised the vast majority, as that is just like the most liquid asset in the world. And then looking at stablecoin volume in particular, mirrors that of the aggregate assets, but drilling in a little bit on the post-UST world, you can kind of see what this new ecosystem of stablecoins is starting to look like. And USDC has started to take over. It's still a fraction of what UST was. But then you also have some like the decentralized stablecoins, which are pretty big in the Ethereum world, now able to be ported over into Osmosis, but they just like haven't really taken off yet. So another chart just showing like the magnitude of this. So looking at like the peak liquidity of these assets. So USD at one point was $280 million, and that just more or less evaporated in the span of a couple days. In comparison, looking at like the new world stablecoins that are popping up are multiples lower. But again, it's only been a matter of weeks, so it's still a work in progress to get more of these assets into Osmosis. And so this is a pretty interesting chart looking at the return on assets of an Atom Osmo pool and then UST Osmo. And so return on assets, that's the fees that go to liquidity providers, LPs, over the amount of like overall liquidity in it. And so it's a good gauge of capital efficiency in these pools. So what's interesting is that stablecoin denominated pools are a lot more capital efficient because there's just more trading volume in and out of them, because more often than not, people, again, want to trade using stablecoins as opposed to two different volatile tokens. And so it becomes like a more attractive pool to in. I will note though, so this does not take into account impermanent loss, and there is higher impermanent loss when you have a stable asset and a volatile one, as opposed to two volatile assets that more or less trade in tandem, so have less like divergence. So kind of just key takeaways from like our quarterly report and everything, this presentation. So like stablecoins are a really pivotal part of any exchange ecosystem. And Osmosis more or less had entirely just UST being that base asset, which put it up to a lot of risk on the fundamental level. And so when that went away, we just kind of see exchange volume and liquidity dry up. But now that with the introduction of the Axelar bridge, being able to bring in more ERC20 tokens, like that opens up a massive opportunity of a lot of capital that can now start flowing into the Osmosis ecosystem and now fill that void that Luna and UST left in its wake. So I'd expect to kind of see USDC, Tether, a lot of the fiat collateralized ones, really increase in prevalence, but then also getting some more of the decentralized stablecoins that can actually get like incentive structures to get them into the Cosmos ecosystem a bit more, to have a bit more resiliency there. And yeah, we'll be releasing our Q2 report end of July, so keep an eye out for that, for other good-looking, pretty charts from Messari.
Jack, thank you so much. Jack Purdy, everybody. All right. This is, I feel like, the first conference that I've ever done where we're actually on time. It's amazing. I feel like normally we slowly just look over like a minute and 2 minutes and 3 minutes and you get to the end of the day and it's like an hour behind schedule. But we're on time! I fucking love it. I love it. All right. Next up on the stage, give him a minute because he just got here. Greg, are you ready? We're just. Pardon? Oh, put this mic up. Thank you, sir. Test 1, test 2. How do I sound out there? Do we sound good? Fantastic. All right, guys. Next up on the stage at Osmocon 2022, Mr. Greg Landaway.
Hey, everybody. Just imagine that I have a really professional and awesome slideshow, and we'll be good. Having some issues getting it brought up, so. Hi, everybody. It's really lovely to be here. It's pretty awesome to walk into Osmocon and see so many friendly faces, and just love it. So I want to give a talk about regenerative finance on Osmosis and the relationship between Regen Network and Osmosis, and just do a little bit of basic education on what regenerative finance is, why we're stoked about it at Regen Network, and what we're doing to make sure that Osmosis is the home to regenerative finance liquidity, right? And what the sort of interchain relationship, interoperability story is, etc. So I'm going to walk through a couple of different pieces here. So first and foremost, I'm going to give everybody a little bit of an overview of ReFi, what it is, why it's exciting, what the potential is. Then I'm going to talk a little bit about the sort of the next steps that are taking place to bring carbon on chain to Osmosis, where that's at, give everybody an update. You may remember there was some governance proposals and stuff in the forum, so I'm going to give everybody an update about where that's all at. And then we're going to talk a little bit about the future, like what this is all going to look like moving forward, what some of the exciting opportunities are with interchain accounts and liquidity management, and sort of the connection between Osmosis as the home of interchain liquidity and Regen Network as an origination system for these ecological assets, right? And why that's such a cool and dynamic partnership. Okay, so ReFi, what is it? Regenerative finance. So this is the concept that we can create financial instruments that represent real-world regeneration. Carbon credits are just really scratching the surface, but carbon credits are an existing market which represents taking some positive action in the world. So I'm going to take a step back, because a lot of people ask, well, aren't carbon credits just bullshit? Isn't this just greenwashing? What's the real value here? Why is this important? So I'll just sort of address that first and up front. Okay, so carbon credits are interesting and important because they represent a movement which is to include carbon emissions as a liability on corporate balance sheets. So this is sort of beyond the concept of just, there's different facets of this. Some of the facets are like, hey, companies want people to know that they're responsible because it's good for customer relationships. There's also, hey, there's compliance markets like Europe where you need to do carbon accounting and there's a cap and trade system and you're forced to participate in that. But in the United States, there is a growing movement through mostly shareholder activism in which it's now kind of consensus that for publicly traded companies, it's your fiduciary responsibility as a corporate executive to include carbon emissions as a liability on your balance sheet and be working towards, balancing that liability. And thus the birth of the voluntary carbon market, right? So just to sort of say, this is a big industry, off-chain. There's a sort of off-chain market. There's just sort of adoption and demand. The off-chain carbon market has been expanding something like 30% per annum. So it's a thing, it's interesting. And why is it interesting to bring it on chain? It's interesting to bring it on chain because a bunch of the issues that the carbon markets have, like transparency, traceability, liquidity, and governance, are all things that we think a lot about in the blockchain world, right? This is what a public blockchain was built for, right? It's one of these rare opportunities in which there's a real world use case and the technology we're so excited about is kind of perfect for it, right? So it's exciting. There's also, I just want to mention, there's sort of a world beyond carbon as well, but because the first liquidity and market mechanisms that we're focused on at Regen and the things that are going to be coming to Osmosis soon are going to be these voluntary carbon assets. I just sort of wanted to land that ship around why it's valuable. And why it's interesting, probably for, many of you may be traders, probably some of you are participating and going long. Carbon is a pretty interesting asset class, right? Because it is not arbitrary. There's sort of like an existing institutional adoption around it. It's constrained supply right now, which is interesting. It also represents doing good things, which is kind of nice, to be able to go long on something that has like public benefit. Wow, that's nice. So those are all attributes that make me believe that carbon is a really interesting digital asset to mix into a portfolio as well, right? So just, and that's one of the reasons why it's getting so much traction in the larger Web3 space. And, our job at Regen is to make sure that the IBC economy is a welcoming home for on-chain carbon, right? And Osmosis is the logical place for liquidity to be building, right? So that's why we want to make it possible for, yield farming for carbon assets to be taking place to build liquidity, right? And then to make sure that that commodity, on-chain carbon, has a deep enough liquidity to be able to start to be useful for things like collateralizing Inter or other potential stablecoins, right? This is really exciting, right? To be able to start to have because carbon has an off-chain market, it's not correlated with crypto markets, to have an on-chain digital asset that is going to be increasing in value over time due to other supply and demand dynamics integrated into our financial ecosystem, our DeFi ecosystem, is really, really important, right, for the stability and health of the whole ecosystem. Okay, so regenerative finance has really started to explode. I think it was about a year and a half ago that I first put #refi in my Twitter bio, And then since then, a bunch of big things have happened. And you can look at, you can sort of like say there's a world before Klima and a world after Klima. who here is familiar with Klima now? Yeah, it's pretty good. They were in, Wall Street Journal, and it's famous, I think Klima was trading for like $4,500 briefly, and now it's trading for like $3. So, but it got a lot of attention, and it got a lot of attention around bringing carbon on chain, essentially. That's why I say there's a world before and after, because now there's this explosion of interest, right? And meanwhile, Region Network, we're sort of working hard on this set of really challenging issues in order to get to this vision which I was painting, which is one of deep enough on-chain liquidity for a high enough quality asset that it can be considered collateral, right? That's from a DeFi perspective, that's the holy grail, right? But what are the conditions that need to exist for that to take place? Well, we need to understand that it's a high integrity asset. It's a commodity, right? So it needs to also have utility, and it needs to be usable. So that's why we've started with, for instance, shout out, offsetting Osmosis, offsetting Stargaze. We're going to be offsetting the hub. We're going to be offsetting Evmos. We're going to be offsetting Region, and soon we're going to be automating offsetting. And soon we're going to be automating transactions. So that you have this on-chain commodity, it's useful when it's used, right? When companies are coming and buying and retiring it. When blockchains are offsetting their emissions. When Bitcoin miners are creating green offset Bitcoin. Hold on to your seats once we start working with Axelar and creating green wrapped Bitcoin that originates on Region and goes to Osmosis for liquidity. Things are going to get really fun, right? So that's the utility. That's where like these carbon assets, which are creating regeneration in the real world and are an on-chain commodity, are being used in the ecosystem, right? So that's fundamental to go along with building liquidity. You don't want to just be building liquidity because it's just abstract and nothing. There needs to be sort of like the circular economy of use, again, because it's a commodity, not just an arbitrary asset or, So, okay, so refi, utility, carbon is a commodity. We've already been taking steps to start offsetting carbon and sort of showing that demand. The other piece, how many people here are familiar with, when I talk about, I think it was I don't even remember now, was it maybe Prop 64 in Osmosis, around offsetting Osmosis carbon? A few people? Anybody vote? Nah? Cool. So we did a series of, we did a really amazing job, and props to the community support, the Osmosis community support DAO. They're freaking amazing. We did a process with them to create a set of governance proposals. One of them was offsetting, right? Because I'm talking about sort of like, you have this circular economy for this commodity. And one of the things that it's used for is offsetting, right? So that you can say, our blockchain is carbon neutral. And why is that important? And sorry, this is like a slightly non-linear talk, but why is it important for the blockchain industry to be taking responsibility for carbon emissions? Regulatory, well, exactly. So, folks, we're in a competition of different monetary systems. The theory here is that we can create more public goods with less negative externalities. That's like the basic value proposition of the entire Web3 space. Is that we can create transparent, community-owned, financial infrastructure that's fair and results in the building of wealth that's distributed and has positive externalities with less negative externalities. So if we're forever fighting this story of, the carbon boogeyman, it's just going to be hard to continue to build adoption. Especially Gen Z is really tuned in to the fact that there's a climate crisis, right? So it's really important that there is sort of like this circular economy flywheel in which we're sort of accounting for carbon emissions, baking it into our operational costs. And the nice thing is that also creates, as I said, the opportunity to have an on-chain asset class that is not correlated with the rest of the crypto industry. Right? That's amazing. And that has a strong, like there's a strong bullish signals, even in today's economy, around the carbon economy. Right? So it's a really strong asset to be bringing on chain. Okay, so I think it's easy to understand. Osmosis's role in this is to build, to host liquidity, right? And to serve as a dynamic experimentation venue for new financialization experimentation. What's Region's role in all of this? And why do we want, you know, and why is this a beautiful interchain story, right? Classic interaction between sovereign zones. Region's purpose is the origination of high quality ecological assets, including carbon, right? We're a natively Web3 carbon registry. We're a system for digital monitoring, reporting, verification, and credit issuance. So we're like the production, you know, if you think of wheat as a commodity, Region is like the wheat farmers, and Osmosis is like the Chicago Commodities Exchange, right? So there's a symbiotic relationship here in the best of worlds, in which we do our job well, which is to develop, to go out and farm that wheat. You know, we want to develop the supply of carbon. And in Osmosis, you know, we want to develop the liquidity and demand for that in different ways, right? So this is the symbiotic relationship that then, as we build it out, results in the ability to have a high quality collateral class to like anchor the building Cosmo-Fi ecosystem. Okay, how am I doing for time, by the way? 5 more minutes? Okay. So, let's talk about nature carbon ton and practical, sort of like grounding this in practicality. So, we made a promise to the Osmosis community to bring the nature carbon ton to Osmosis, and we have been postponing that in order to build a bridge between Region and Polygon, because Polygon is currently the largest liquidity source of this specific carbon ton standard, that we worked hand in hand with Toucan to develop the standard, and then they did this whole process to get a bunch of carbon on chain. And we realized, you know, originally we wanted to really quickly accelerate getting carbon, you know, into the AMM, getting on Osmosis and yield farm, and then we started to realize that, you know, first off, they were very reluctant to have a one-way bridge. It was just sucking liquidity out of their ecosystem and into our ecosystem. Secondarily, there's a big arbitrage opportunity, right? So if you have Osmosis yield farming getting turned on, and people are like, oh, I can turn my carbon into a yield farm, you know, yield earning asset. This is exciting. Boom. You know, there's an arbitrage opportunity between chains, and we really wanted that to be a community arbitrage opportunity, not like insiders who can manage command line interface and like get things from here to there. So we basically slowed everything down. We're like, okay, we need to build the bridge, make that all clear, make the user interfaces. And it turns out that bridges take a long time. Has anybody ever, there's been a few bridge exploits, you know, okay. So, current status on getting NCT onto Osmosis, that's unified, right? Where people can mint it on Region, and we can pull from Polygon, and we can have like a multi-chain unified carbon market, right? In which Osmosis can start, you know, mining liquidity, right? For us to start to build towards that vision of this as a high enough quality asset to then, you know, be folded in as collateral in the future. You know, we're looking at turning that on probably in late July, right? So we're cranking away, partnering with Toucan, things are going well. Version 1 of the bridge will get turned on then, and then we'll be working with Axelar to basically build a much more multi-chain deployment of that and sort of like transition. It's exciting. That'll probably happen much later, right? Because there's a lot of work happening, lots of assets, and lots of traffic in that. So that's the NCT update. So look forward, hopefully, knock on wood, and no promises, look forward to late July. We'll actually start, it will be possible to be actually participating in governance to decide if we as a community want to be bringing, turning liquidity farming on, yield farming on for NCT, like getting high quality carbon liquidity and starting to build it up into the Cosmos ecosystem. Very exciting. Meanwhile, at Regen Network in July, we're going to be launching our marketplace for eco credits. So you'll be able to buy natively produced eco credits, basket them, and move them over to Osmosis. We'll be able to start talking about governance of what sort of like basket criteria, what are the standards for the fungible commodity versus the non-fungible commodity. And if I had another hour, we would start digging deeply into this whole process between non-fungible and fungibility related to eco credits, essentially, these ecological assets. Because each one is completely unique, right? And we make these decisions to sort of like sort and standardize them to be able to build liquidity and to have the benefits of markets, but then there are some downsides. So there's a whole sort of like responsible fungification process. That responsible fungification process, again, this is one of the things that Regen Network does, right? So by the time it hits on Osmosis, the governance decisions and the functional process of fungification has happened on Regen, right? And so for those of you who are interested in that and want to participate in that from a governance perspective, Regen Network is a great place to come and engage, right? To participate in those conversations, to participate in ensuring the quality, right? So again, Regen Network, we have a system that is designed to be originating ecological assets, right? With a community of scientists, with a community of project developers, with a community of engineers that are dedicated to that, data science, verification, asset origination, and standardization of the fungification process. I don't even know if that's a word. Then we are shipping it out to Osmosis, where we build liquidity, where we can start to be thinking about the financialization of these assets, sort of putting the DeFi back into refi. So that's the whirlwind overview of sort of the interchain relationship between Regen Network and Osmosis, the coming launch of carbon onto Osmosis, hopefully as a yield-earning asset. There's lots of governance between here and there. And again, a little bit of a glimpse into what we're about to be shipping at Regen Network, which is sort of this full-featured marketplace credit origination system. Regen Network 4.0 is coming. If you're a token holder, go vote. Well, actually, you can't vote yet. Go into Commonwealth and read what's happening. We're still testing beta, which, as everybody's probably aware now, testing is good. So, thanks everybody. It's lovely to be here. Go Osmosis, and yeah, fun to be here. Thank you.
All right, a round of applause for Mr. Gregory Landaway from Regen. Greg, thank you so much. Up next, we have a panel of, some Twitter friends that I've met from time to time and don't actually know their actual names, and just know their Twitter handles. We're talking about sub-DAOs. This whole hub and spoke model, I feel like we've just learned throughout the day, just keeps going out farther and farther. So now we're talking about sub-DAOs. Moderating this panel is our good friend, Mike. Mike, step on up. Next up is Mr. Steven, 94K, who's a member of the Marketing DAO. What's the 94K mean? I don't know. I'm going to learn. Next up is Emperor Osmo. I'm sure you guys have seen Emperor Osmo's Twitter account. I feel like the main Osmosis account retweets it a lot. And then our last friend, George Beal. Oh, I got it right, George Beal. Come on down. All right, do we have mics for everybody? I have one mic. I'm going to hand it over here. Hello.
Okay, hello, my name is Mike. I'm with the Osmosis Support Lab. For those that don't know the Osmosis Support Lab, we are a sub-DAO that is funded by the Osmosis Community Pool, and our task or our roadmap is to build support systems for the Osmosis DEX. So we're currently in the process of finalizing some how-to videos, a support site, as well as a 24-hour live chat. So new users trying to ask questions can ask questions 24 hours a day with a live staff member. We also have Steven. Do you want to?
Just for me, thank you so much. So I am with the Osmosis Ministry of Marketing, also known as OMM. Sort of another mirrored counterpart to Mike's DAO here. And we are in charge of marketing. We're also community funded. We just passed our second round of funding, and we've got a lot more exciting things to come. We use these funds for all sorts of activities, from meme competitions to funding events like Permissionless, Consensus, Essential, and so on and so forth, and also social engagement.
Hello, my name is Keplr Support. I actually handle the Twitter account for Hazard Notes. We provide data analytics or customizable host blockchains. Right now, we really just focus on Osmosis, providing governance dashboards, safety dashboards.
Hey, I'm George. I'm with Commonwealth. So we're the governance platform for Osmosis and a lot of the different Cosmos chains. Pretty much we do end-to-end DAO tooling, so everything from DAO creation. We're about to launch crowdfunding, which would really love to use that for starting up new sub-DAOs for all of you. And then governance and discussion. So, really love your community.
Awesome. So I'm going to start very general right now. Emperor, do you want to explain maybe what governance means to you?
Sure. So governance is all of you. We all come together basically for a common purpose. So it's really the ability to come together as a group to achieve a common goal.
George, do you have anything to add?
Yeah, I think just going maybe slightly deeper, I think with DAOs can look a lot more different than I think some people focus on it. So, even a small group of people figuring out where to go to dinner is like a DAO. And so, with that, I think governance is just like how you make decisions.
Awesome, thank you for that. Okay, Steven, what do you think is one of the biggest successes you've experienced with your the marketing DAO? Something that you were excited to fund, or?
Yeah, a couple of things come to mind. I think just being able to. Yeah, all the various events that we put on, it's just so great to come out, get engaged, meet community members, give away free t-shirts. But beyond, just the surface level of going to these events, we've met a ton of people, potential partners, new avenues for marketing. So I would say that, in general, is something I'm very proud of.
Okay, and for the Osmosis Support Lab, I think our biggest achievement will be the support site. It will be support.osmosis.zone, and it will live on a subset of the main app, which gives a way to funnel in the support system. So as Steven brings in new users through his marketing team, we can help onboard those new users at basically any time of day. What do you find was one of the biggest challenges working with a working group? Something that maybe wouldn't be an issue in a traditional company? Steven, sorry.
All right. Yeah, I don't know if this is too soon, but so when the whole UST peg happened, right, we had a portion of our funds in UST, and we had to decide what we were going to do with these funds. And we needed to make a decision very quickly, otherwise the consequences, right? And at that point in time, I think UST was around like 75 cents. And in our DAO, we need a quorum of 4 people agreeing, and then we can sign off, and you can hindsight, 2020. But anyway, we had to work together with this person, and I had a chat with him one-on-one, like, hey, this is super risky, because if it comes back, it will go from 75 cents to $1, maybe 25 cents. But if it doesn't, then it's all gone. So after maybe a 30 or 40 minute chat, we turned this person around, and we were able to literally save our community pool funds by reaching quorum quickly. I think in the time between when we had 3 signers agreeing to the 4th signer, it slipped from 75 cents to 70 cents. But when we executed that transaction, we all signed it very quickly. We were able to save the community, the treasury of the marketing now. And the funny part of that story was that when we liquidated, I think it was around 200,000 USD-ish, and we were able to get close to 100,000 Osmo back, which was almost the exact same amount that we were allocated from the community.
Okay, from the OSL, one of the main obstacles we have right now is trying to get engagement from users in regards to our proposals. Is trying to get engagement from users. We try to push messaging out on our social networks. What could we do more to gather engagement from our users before the proposals go on chain?
I'm not sure about before the proposal goes on chain, but I think there's multiple avenues as far as providing information to users. We have Common Wealth, which a lot of people have Twitter, Discord, Telegram, but I think we're missing a unified way to just kind of get a message out, not only before the proposal goes on live, but during the proposal, maybe provide some data analytics to what the current voting turnout looks like, for example. It might be something that might help enough. Providing data that, just harder data to what the impact of a particular government proposal may have on chain. That would probably incentivize us to just be more active in the community.
George, how do you think we can get some more engagement on Commonwealth before we push it on chain?
Great question. So, I'll talk about some of the product features that we're working on to try and improve that, and then also just other tips. So, one big initiative for us over the next 6 months or so is to launch a mobile app. Generally, that's where people are spending a lot of their time, and when you're checking social media or whatnot, probably on your phone. So, just helping to make governance more mobile friendly, I think, is a really big blocker for the space right now. And then additionally with that, better notifications. Figuring out push notifications, email notifications, and then for your community specifically, I think especially getting really good distribution, and so we enable webhooks, and so you can start to have whenever a new thread or proposal pops up, have it automatically send a notification to Discord, Telegram, whatever. And so I think going through those methods would definitely be helpful. And then the last idea that I picked up when I was talking to some governance folks last week was I don't know if anyone here is from California. I'm from California. When it comes time for elections, California sent out a booklet that in very simple words says what a yes vote and what a no vote means, and why these things matter. And so it'll even say if you're voting on say opening up a new nuclear power plant in the state, it'll say okay, this is maybe the impact you'll see on your energy bill, and this is how much money it will cost taxpayers. And it makes it really simple to understand these things, especially if you're not someone who's politically active. So I think trying to make more user-friendly documentation around governance and just less scary, I think is a great way to help user engagement.
Cool. You kind of answered my next question there, but being on Commonwealth, you have a lot of different governance structures on different chains. Could you maybe give some information on what's working, what's not working, maybe specific to Osmosis, what we could change in our governance structure, or that you've seen work elsewhere?
Yeah, honestly, you guys are probably one of the better communities for governance, so good job. I think from there, probably getting a little bit more structure in your Commonwealth forum. And so, I mean, I think this is something DYDX has done very well. There's a lot of structure, a lot of subtopics, and a lot of like clear process. And I mean, especially since you guys are so active with governance, I think sometimes you can sort of just like get lost in the ways. So I think doing something like that just makes it easier.
Okay, and Stephen, this next one's for you. A lot of effort goes into like the day-to-day interactions on the DAOs. How do you work on coming to consensus as a team?
Yeah, so it's tough because we're all over the world. Some of us have never met each other, different time zones. Some people have full-time jobs, others don't. So the expectations are different for everyone because everybody's in a different situation. So a couple things that we do to stay aligned, especially in new V2, which is the new round of funding, is that we're very active. We're participating almost every day in the chats. Every week we have sort of a call where everybody hops on, and it's a regularly scheduled meeting, so we know that's the time to allocate, make sure this is the time for everyone. And then for more urgent things, like certain things that they decide, we'll talk about that immediately in the chat. But we also have regular intervals in which we batch the transactions for multi-sig signatures. That way we know exactly when to get on and when to be available to get those transactions through. So those are just some of the best practices that we use.
Back to, was there any time that you failed to reach consensus as a group? And if so, what became of that decision?
Yeah, I mean, there are times where we fail to reach consensus or outright reject an idea, right? So I mean, there's one thing where it's like let's say an idea. I think the most recent one, there was a group of people that were trying to create like an Osmosis theme song, and then kind of acted out as a music video. And we reviewed it, and we were like, yeah, this is probably not the thing that we wanted to do right now. So we actually reached consensus pretty quickly, but the ultimate decision was to reject.
Okay. So, aside from marketing, brands, and the support lab, what sub-DAOs or working groups do you see existing in the future? Ember, do you have any takes on that? Do you have any ideas on what you think could be, a sub-DAO or a working group?
I mean, I think you can have a sub-DAO for anything. I think especially where if there's a community desire, I think that's where it's best to start.
Stephen, if someone was interested in joining a sub-DAO or a working group, how would you advise them to look into it and get started?
Yeah, great question. I don't have a guarantee, one size fits all. I can only speak from my personal experience. And how I got into that was not even trying to get into that. I think the most important thing of anything you're trying to do related to crypto, if you want to get more involved, is just to show genuine interest. Really understand the community, understand the product, get engaged at Commonwealth, get on Twitter. My personal story is I had an idea for some ion token economics, right? And I considered it on Commonwealth, and then I guess I sort of developed a reputation and somebody reached out to me to get engaged. So I think that's one way. And just to get involved, whether or not you get into it now, you're going to be contributing to the community, you're going to make a name for yourself.
So looking forward, what is the future of governance storage? Where do you see governance on the blockchain going from here?
Yeah, so I'm a really big fan of fractal DAOs, which are similar to like Hub and Spoke, as was referenced earlier. So in this, pretty much it's like not everyone is qualified to make every decision, and probably the figuring out like who are the right people to actually be voting, and then also understanding like where that line is, where decentralization is very important. When you're processing payroll, you don't need 17,000 people to vote and say, okay, yes, let's approve payroll for this week. So I think with that, beginning to break down into this like structure of sub-DAOs and working groups where certain individuals are then either elected or open to join, and then they own a certain bucket of responsibilities. And so I think that's definitely the way moving forward. I think new voting standards as well are really interesting. Someone needs to figure out civil resistance, but I think quadratic voting, one person, one vote are really interesting mechanisms, and if you can start to use like Twitter attestation to verify people's identity, you can start to have more equitable voting standards as well.
Purdy, anything to add?
Actually, the way that we look at Osmosis is we think of it as the United States. In the United States, you have your senators and you have your representatives. We see validators as senators, but we think that LPs should have their own representatives as well to make decisions on what best benefits that particular LP. So, to give you an example, goal number one, Adam also, there was a proposal that was recently passed, basically was to lower the incentives for that particular pool in order to allow the ecosystem to grow. Well, if you look at the vote tally, a lot of the votes that came probably from no were from people that had a stake in that particular pool. But if you had governance that was set to those particular LPs, they can make decisions that benefit that sub-ecosystem, for example. I just don't think it's efficient to just have almost like a centralized voting for all of Osmosis, as opposed to just having just sub-representative power.
And I know you work on a lot of the data analytics and look into the governance of Osmo. Is there like trends that you're seeing in the Osmosis governance?
So there's two things. Obviously, with superfluid staking, once that became legal, initially it kind of centralized a lot of voting power to the top validators, and that I don't know that had to do with the interface that Keplr enabled. For example, so when you actually clicked on superfluid staking, you were automatically just forced to superfluid stake to be validated that you already had. You didn't have that particular choice to maybe go to another validator, right? So I think maybe providing a lot of data, providing additional information as governance proposals are passed might incentivize users to become more active in the community.
George, if you ran into a new chain that was looking to launch with their own governance module, what are some words of advice you would tell them in that decision-making process to guide them along, how to build that out?
Gotcha. Yeah. So I'd say step one is really figure out why you exist. So there's some sort of community interest here. We want to achieve something, and from there, then figure out okay, what needs to get done for us to achieve that goal. So we'll go with just a lending market. You want to be able to lend in a decentralized manner. You need some sort of risk underwriting. You need some sort of marketing, etc. And then start to understand, okay, what are the best ways to select people to make each of those decisions or run each of those operations. And I think from there you can begin to get this organizational chart where you understand, okay, what are the different sub-DAOs you need, what are the different types of people and stakeholders you need. And then from there, it's a matter of sort of kickstarting the ecosystem, raising your funding. So we're working a lot on new crowdfunding products. So this is actually going to launch here in about a week or two. And so with that, you can then begin to actually have a treasury, so you can run and do your jobs. I go with that. I guess the other piece of advice is keep it simple. Don't try and reinvent the wheel. I think when you get too complex, you end up with things like Beanstalk, where it's they could have just used Governor Bravo and had the time lock, been pretty safe, but they want to get really experimental and have this complex system. More complexity means more opportunities to get hacked. So.
Stephen, this last question I have, and then I'll open it up for any audience questions. With working with these subs, we are working as a team on a daily basis. What are some ways that you found to help foster the synergy between the team?
I think just meeting people in person for the first time, right? I mean, you see everybody, and this is not just for SoCal, overall team, right? Like, so many people I know from Twitter, so many, NFT profile pics from Telegram I've seen, and it's like, oh, you're that guy, we talked together all the time. And then it's like meeting each other for the first time isn't really like meeting each other for the first time, right? So it's like, it also kind of has some stuff in common. Secondly, is just to share like what's really going on in your life. And, people, especially online, strangers may want to be sort of shielded, but to know, like, all right, this person is going through this, that kind of makes it more human because there may not be opportunities to get to meet people as frequently as we like when we share these little tidbits about people's daily stories. You kind of get more invested in them, and then as a byproduct, you get more invested in what you're working together as a community.
Do we have any questions in the audience about DAOs or governance in general?
Make sure my regular voice is plenty loud. But I'll use the microphone just because it makes it a little bit better. First off, I want to say what's up. I'm Happy Dylan. We talked a lot on Discord and Telegram and stuff. Mike Barb. Hello. It's good to see your face. But yeah, I also really like DAOs and I start DAOs all the time and stuff. And I just wanted to kind of ask you guys, like, what drew you in the first place, and like, what made you so convinced that the DAO is like the structure that you would like, use to create this stuff in? Because Osmosis could have sub-DAOs, sure, but it could also have like a foundation, or it could have like a marketing corporation or something, right?
Yeah, I think it is important for community members to step up in these sub-DAO positions. I think if the foundation handled every aspect of Osmosis, in regards to marketing, legal, support, I don't find it very decentralized. I actually got into this as a community member. I was approached by someone on the foundation to see if I was interested in joining the support lab. It really drew me into it. I come from a community support customer service background. I think the challenges between the corporate world and the crypto world is really interesting, and those challenges really drew me in personally.
My question is for Stephen. So how do you guys, when you get this grant to sub out, how do you guys allocate rewards for contributors when you have some who are part-time, some who are full-time, some who are putting a lot more work, some who are putting in less work?
That's a good question. So we have a base rate at which we are paid at, and you can see this publicly. I guess I can disclose this public. So it's $3,000 per month just for the base signer. That's your duties as a multi-sig signer, sign things on time when needed, and 10 calls to be active and participating, right? So that's the base rate. In addition to that, if a member goes above and beyond, we can recognize that person, and depending on what it is, monthly contribution, we can go a little bit above and beyond. And then for other things like, for example, attending conferences, we have like per diem rate. So that's kind of how we structure things. And all the stuff is available. You can see in the records of how those are built out.
I really like the point about the voting fatigue because I think that's real. When you have quite a lot of votes one after the other, I think what would be quite interesting is, like you said, people being able to subscribe to certain topics they care more about and being able to participate. And it's great if that's through something like Keynote, but it would be even better to have it natively in whichever sort of voting site you have, or whichever interface you use, be able to filter that. I think that's it's only a problem once the community becomes large enough, complex enough. It's probably not something everybody needs, but I really like that point. Is that something you're considering for sub-DAOs at least, in general, having governance categories that people could then subscribe to?
Not sure if that was from you or not, but yes. I think generally, again, we're very bullish on notifications and think that hopefully make sure that people don't need to read every single word on our forum or just, proposals, whatnot, is important. And so from there, just ensuring that people know, when do you actually need to check the phone or your computer. Yeah.
Is there any other questions? I think we might cut it a little short. We're all set. Thank you guys for joining and hanging out for our sub-DAO and governance talk. Appreciate it.
Jacob from Havana. Jacob, take it away. I'm glad I found you, by the way. I'm glad that you meandered up here. I love your energy.
Thank you. Hello, everyone. And thank you for all being here. I know it's been like a long day, so. I'm going to talk about getting wrecked on Dora. I think it's only been 31 days, right? I mean, if you would have told me 31 days ago that I'd be making $1 million Luna an hour flipping burgers, I wouldn't believe you. That was just. But by a show of hands, how many here have been wrecked on Dora? Oh. So maybe it was too soon. But man, yeah, getting wrecked on Terra hurt. And it hurt more than prior times I've been wrecked. I mean, if you're in crypto long enough, you'll get wrecked. I've been in crypto full time since 2017. And I've been wrecked with Terra Luna. It hurt a lot more. And I kind of wanted to ask myself why it hurt so much. Well, part of it could be that I gave Chase the middle finger, closed my savings account, put everything in Anchor. Who doesn't want 20% interest, right? But I think there's a little bit more to that. I think what was more to it was the community that we were building at Terra. I think what was more to it was the friendships that we were building. I don't think that mainstream media or other people outside of Terra Luna understand this, but behind every logo is a dream. Behind every dream is a team. Behind every team are customers. The team has mortgages, student loans, they're buying papers. Ouch. I can see the PTSD working about that. And when it crashed, we didn't just lose money, but we lost a lot of our dreams. At least that's what it felt like. I think I can sum up my entire presentation from this message in our Discord. We have more than 10,000. There are hundreds of similar messages, but I think this had it in a nutshell. But then, just a few days after the crash, I think something special started to happen. Twitter just blew up with support from every community. We had every ecosystem. We had Twitter spaces that were running, it seemed like 24 hours a day. I had spent maybe 15 hours a day in those Twitter spaces. It was therapeutic. I cried. I heard many of my friends cry, many strangers cry. But it was a beautiful thing that when all the support and all the differences I felt melted away, and we all came together with unity, with strength. as family. Because we're going to make it. We're all going to make it. I mean, it's only been 31 days, and look how quickly we've all moved. Look where all the protocols are finding new homes, how the teams are pushing forward, how we're still shipping. That's incredible. That's just, it's a power of strength. I think that's my takeaway, at least. Now with Alana, where I'm Vice President of Partnerships, we decided to make a commemorative, because who doesn't want to be reminded of forever being wrecked on Terra? So we had this 10,000 NFT dragon, and this isn't a shield because it's already filled in, but it's more of a discussion again of the ability to move forward and to continue thriving. And let's see if this works. It's supposed to be. There we go. So it's all these different dragons that are wrecked, so every type of wrecked occupation you can think of. And we launched this just last week, and within just 4 days, we had over 15,000 signups for it, which again I think is just a sign of the community. And it was a free mint, not infrastructure. This, did you see the 4,701? So I'm just that filled up. So I think they're so cute. I'll show you my favorite. There we go. But we're leaving Terra. We don't know yet where we're going. We're still looking for a new home. And when we go on the new home, we're going to turn on these mints and allow everyone to go and the dragons on the home. But for that, that is the end of my presentation of being wrecked on Terra. Thank you. Any questions of what it's like to be wrecked on Terra? Or maybe your experience? I'm just yelling at the cat because I was here. You over there. This is just my personal opinion. I don't know yet. I think you have to look at who the builders are and how many stay. And I mean, there's so many great builders, but I think if enough builders stay, then something positive can happen.
So, given your experience, what do you think we could do differently to like prevent a second Terra situation?
Yeah. I mean, I was a huge fan of the idea of an algorithmic stablecoin that was truly decentralized. Like, to me, that's something that you just can't have someone shut off USDC and there's no crypto. But it was kind of silly in hindsight not to know that. I mean, if a hedge fund can crash the pound, then they can crash the cryptocurrency. So I don't know what can prevent it, but I know that to be more diversified is certainly one of my takeaways. Okay.
Welcome up on the stage at Osmocon 2022. I think I tried to tell you, that's my bad. Oh, nice. A round of applause for Tommy, everybody.
Thank you for the interruption. You get the slides up, or? Oh, there we go. Sweet. All right. Awesome. All right. Well, I'm gonna just give a little chat about my experience building on L1 and some issues I ran into and how app chains can fix those scaling and issues. So just a quick background on myself. I've been a software engineer for the last 10 years. Really got into crypto on the investing side in 2017, did some Solidity development in 2018, but jumped full-time into blockchain development after winning a hackathon in January of 2021. Or 2022, time's fine. So what we first built was an American-style options protocol trading on a central limit order book on top of Solana. And where we wanted to go was into trading infrastructure. But we ran into a bunch of issues along the way. So before I go into the issues we ran into, just kind of a little bit about Sci Options and Sci Finance and where we're going is we're creating a decentralized organization focused on the democratization of financial infrastructure. I got into this when I was denied API access by a brokerage to automate some basic options trading, and that's what kind of led to entering the hackathon and building options into the blockchain. But options didn't really take off too much, so we were focused on structured products with Sci-Fi. We have a team out of Singapore that's been contributing to building that stuff. Just launched our D2 UI this week. And then we were focused on options, airdrops, and options-based liquidity mining with our project Fusion. We think there's a better way to distribute tokens to community-aligned incentives, give upside, DAO token swaps should be options, aligning upside, etc. So going a little bit back to the trading infrastructure, is we wanted to build, CeFi in DeFi. We wanted to compete with the FTX, the Binance of the world. And so you have to, what attracts traders is capital efficiency. So you want to cross margin, spot markets with perpetual futures or term futures and options to create like the most capital efficient, infrastructure there can be. That will attract market makers who are going to put tighter spreads, which then attracts more traders. And then that's how you kind of solve this two-sided marketplace. But for those who don't know Solana development, or if you've never developed on top of an L1, you have to deal with the runtime constraints that are imposed on you. So for Solana, you have this arbitrary compute number that, based on how much compute you use from your protocol or your contract, if you hit that compute limit, it just stops. There's no gas. You can't just endlessly burn gas or run out of gas. So everything you build has to be within the confines of that compute limit. And then you also have these account infrastructure or account data structures that have to be fit to what you're building, and you have a limited data size. So when you're architecting your application, you really have to think about the data architecture underneath the hood of what the L1 is actually doing, and confine your engineering decisions to the decisions that have been made for you by that L1. So when we were trying to build this, we didn't have any chance of, or it became very clear that it's very hard to compete with CeFi when you have to, deal with all these constraints. And for CeFi, they can just up, the amount of servers they're using, or boost the servers that occur usually if they need more compute, or you can't. And then also, for those who've paid attention to the broader crypto world, Solana, we see a lot of scaling issues, not just from the architecture perspective that you have to make, but also just the network being congested and not hitting the scalability that they originally said could be done. A lot of this is happening through bots trying to mint NFTs, bots who are running arbitrage opportunities, trying to collect some MEV, and liquidator bots. What they're really doing is they're spamming data packets directly to the validator nodes instead of going to an RPC node, and they're flooding the network. And so you have all these other applications that are driving all of this traffic and basically DDoSing the network. And so if you're trying to build a trading platform that requires traders to make trades in less than a second, and the network's going down, and the assets are changing prices elsewhere, they're not going to have a good experience. And so when you have all these other applications flooding the network, your application becomes terrible, and then it's not going to actually work to take off the way it should. And so that's where app chains solve these kinds of issues. You can actually, instead of being confined to the L1 that you're building on top of, you can actually make decisions and trade-offs that fit your specific application's needs. So instead of having to have a limited compute for this application, you can actually drive, you can use as much compute and subsidize that compute usage for your for the trading application. And then you also have the flexibility of creating or of allowing what applications can be built and deployed onto these networks and what can't. So while we've seen NFTs, Solana has been focusing a lot on NFTs, we see a ton of bots that are sniping these NFT mints and flooding the network. Well, you can create an app chain that has an Apple App Store-like deployment process where there is a vote about what can be deployed and what cannot. So you could design this chain and its purpose, specifically focused on trading infrastructure. So then you can basically cut out all the noise that comes from these NFT mints and other things, if that's what the chain and the community desires. So this is something we've been exploring a lot. We'll probably dive more into in the second half of 2022, which is quickly coming up, once we finish a lot of the existing backlog and infrastructure we're working on. But we think that app chains can make a huge difference when you're running into scalability problems, building on an L1. So that's kind of the gist. You want to reach us for sci-fi.io is where our new soft launch UI actually just launched this week. We haven't even tweeted really about it. And then my contact information is below. If you ever want to chat about blockchain scalability, Rust development, that's kind of where I'm at. And I'm also big into decentralized organizations at the moment. I think they are DAOs, not DAOs, because there's nothing autonomous about them for anyone who's actually been trying to use a decentralized organization to affect some change or do something. So we're doers. Awesome. Any questions? Alrighty, you're self-explanatory. Thanks for the time, guys.
So up next on the Osmocon 2022 stage is the Explore the Multichain with Dora. Is that the name of this project? Not affiliated with Dora the Explorer. Don't bring that up. It's not the same thing at all. What? Oh gosh, am I reading the wrong one? No, you guys they're messing with me up here. Giving me a hard time. All right. A warm welcome to the Osmocon stage to James, Stella, Vivian, Julian.
Awesome. So, yeah, like Viv said, if you want to go to a bridge transaction right now, you have to go to one block explorer minimum. But most likely to see all the individual transactions, you have to do 3 separate block explorers. And that's not only a pain, but block explorers right now are set up in a way that's not very human readable or friendly to new users of crypto. So you can see here at Dora, what we're trying to think of as a way to describe transactions in a way that's simpler and more friendly for new users to see, as well as showing them all in the same space. So let's say you're going to a wallet that exists on multiple IBC chains, maybe also, has an associated EVM address. On Dora, you can see transactions that interface with all the separate wallets, all in the same place, all in line with one another. So you can establish that context for each transaction. To do this, the way that we're showing transactions is a bit different from what you might see today on the existing Block Explorer. So right now, you go to a Block Explorer, you might see a table of data. At best, you might see a verbose, written description of a transaction. We want to make it so that you can scan many transactions at once, and you see human-readable, sort of tags for each transaction. And here, a couple, more traditional transaction types. You see avatars generated for each address, so you can match addresses across different chains. And of course, you see things like what chain that exists on, because you are a multi-chain block explorer. Here you can see a few more of these sort of transaction notation types. I think what's special about these is that even though they're graphical in nature, you can read each one like a sentence, essentially. So, for instance, in this bridge one, you can see you're bridging from something on Avalanche, some USDC over to this Cosmos address, and you're using Axelar to do it. You can take and add information to that as much as you want, but the important thing here is that when you read it out loud, it reads as a sentence, and you can scan them easily because of the visual elements. But of course, Dora will have that traditional block explorer view too. So the further you want to go into Dora, the more you reward with additional data. You can see here, sort of, as you were to scroll down the transactions page, at the top is still somewhat, more of an abstracted view of what a transaction would be. But you scroll down, you get those individual token transfers, and the further you would scroll down, you would get things like the gas limit, etc. One other thing I'd like to call out here is that Dora shows those Dapps that you're using. That each transaction uses. And this allows people, when they're going to view someone's transaction, not just to see what's the pertinent information of the transaction, but also what do they use. Maybe you want to go use that too as you explore a chain. And that will just make this ecosystem better for everyone. And I'm going to hand off to Stella, our wonderful engineer.
So to accomplish all this, we're building a bunch of new chain indexing infrastructure and a unified data model to try to make all of this reusable, right? So we're going to be able to say, okay, we have a Cosmos chain, a Substrate chain, an ETH fork, whatever, and if there's one of those, we can instantly got it. And so basically we're trying to index every chain that has users and has interests and put it in a unified way where we can reuse it. As part of this sort of modular indexing technology, we're also including reusable pieces of UI and API layers so that spinning up a new chain is trivial and really easy to do. Basically trying to be like Google of all the chains on the back end. And that's it for me.
Jim, up to you.
I was told that I was doing slides 10 through 14. So how are we building this? Yeah, so the way we're thinking about this is in a couple of different ways. But the first thing that we want to do is demonstrate the ability to do this work that essentially has never really been done before. When you look at chain, and so we're focusing on 3 chains right now. Oh, okay. Well, we're building, I wasn't sure where we were going, sorry. So we're building this for 3 focuses. Substrate right now, Cosmos, and the EVM. And so the way that we're thinking mostly about this is like, how do you show explorers not only across chain, but we haven't even seen an explorer that can show Substrate and EVM in a single explorer. So I guess we're not moving. You want me to talk about that right now?
No, keep going. That was great.
Okay, so we're focusing on 2 chains and a bridge at first for our MVP that ultimately will show exactly the capabilities of what Dora can explore. And we'll do that through our first chain is going to be Moonbeam, which I will be very excited to show everybody soon. And so what that will show is like the ability to index both the EVM as well as Substrate. The second one is going to be Evmos, which will allow us to show that we can still index the EVM, but now also Cosmos chains. The Cosmos EVM, Cosmos VM.
And then with those three.
And then what? What's that?
With those three, we can index and show in one unified UI.
Yeah, one UI on Dora. So we'll search one exchange, one address, right? One EVM address, and you will get transactions in a single thread across 3 protocols. Awesome.
Beautiful.
And so we have a team that's been building this, hard at work. This is the Dora team here, led by Viv and Bunny as the founders.
I can talk so much about every single person on this slide, and I won't bore you with the details, but actually I will bore you. Okay, not bore. So Bunny is amazing, Dan is amazing. Okay, Dan. Okay, like Nims is amazing, Rachel's amazing, CPU is amazing, Stella's amazing, Julia's amazing, Kitty's amazing, and Anne's amazing. And they're all amazing in their own way. Okay.
That wasn't boring. That wasn't boring.
All right, so like let's hype each and every one of them up. Stella has indexed Soul. She's an amazing engineer, early Unity. Stella's right here. Yeah. Julia is an amazing designer from Instagram. Kitty and Anne are amazing designers who once designed with FWP, and also Dan was the smart contracts, extremely smart, Constitution DAO, core member. Nim is an MEV expert, does it all, amazing. Rachel actually was a CTO of a crypto company that failed during the last bear market, but like has been doing dev work in crypto for over 6 years. And so our team is just incredibly strong. CPU, ex-Instagram, ex-Facebook engineer, who also worked at Tezos before. So.
And there's like one other person that she didn't mention, which is Vivian Fong. And so Vivian, former Instagram.
Yeah, she sucks, so whatever.
No, so Vivian's like ex-Instagram, ex-Google, right?
Apple.
And Apple.
Oh yeah, sure.
Yeah, so very excited, very cool group. And then we have advisors as well. What you'll notice about the advisors that we have are not only are they well known, some of them are in this room. And really what we're looking for is sort of like a group of folks that can help us think about the multi-chain in a like cohesive way. We're excited to have, I'm on there too, although not by name. And so yeah.
All right, does anyone have any questions? Does anyone? When index Osmos? Well, that's an answer Osmos can answer. Like, oh. So.
Soon, hopefully. We haven't done it yet, but we have like started trying to spin up our node and stuff. So,
So we're a public good, and we believe in that, and so we actually, we index and we build through grants. And so that means the Osmosis team and us have to talk. And so if y'all work with us, we can make that happen sooner than later. Yeah.
Yeah, I think there's an Osmosis grants program, which is absolutely incredible. I think Lee and Derek spoke earlier today on a panel. Interestingly enough, I will have to probably remove myself from that vote. I am one of the people that are on the multi-state for the Osmosis grants program. But we're excited to see that grant proposal come in. Hopefully soon. I think that the idea is that I think something like this project is super important, and it's important for a number of reasons. It's only going to become more and more important once Interchain accounts really unlock the complete capabilities of what can be done within the Cosmos. So when you start to think about a wallet address that's in the Cosmos that can trigger transactions on Osmosis or buy an NFT on Stargaze, you're going to need something like what exists today will not and provide you what you're going to need in the future. So we're building towards making sure that when things are like off and running for Interchain accounts, that everyone's gonna come to Dora.
Okay, yeah.
Any other questions?
Yeah.
Yes.
Cool. Thanks, everyone.
Sorry.
One question.
Is there something about IBC that is more difficult to index than Substrate or EM based chains?
No, not particularly. Substrate does provide a couple tools that make it easier, but it's not really anything in the data that makes it harder. It's still pretty standard. I think there aren't existing mature tools for like archiving like all the IBC messages the chain has received, at least I found. So I think the tooling is a little less mature, but like fundamentally the data process is similar because as long as the chain supports the core Tendermint indexer, you can get most of these.
Yeah.
So the lady with the blue hair, sorry, what's her name?
Vivian?
Yeah, you forgot to count yourself and tell yourself that you are also amazing.
Thank you.
Just in case you forgot, I'm sorry.
I forget that every day, so thank you. Needed. Okay, thank you so much for letting us on the stage. If you have any other questions, let us know. We're going to be in the crowd. We'll be here. Yeah, thanks for giving us your time.
Thanks, everyone.
On the Osmocon stage right now to talk about decentralized ETFs is John Joe and our moderator, Chango Unchained. How you guys doing? How you guys doing?
Hello. Test.
Can the people in the hallway hear us? Come on in. Talk about decentralized ETFs. All right, guys, take it away. Yeah, guys, just pop on in. Thank you guys for all being in here. It's all the crowd, it's all the group. All right, Tango.
Alright, what's up everyone? Crawling, let's see you. With your Osmo bomber jacket, only the specialists of the special people get one.
I want one.
You'll get one. Okay, so, who are we here with today?
Hey, I'm Joe, DeFi Finance.
And I'm John, DeFi Finance.
Very cool, what are your backgrounds?
So my background is in quantitative finance. I used to build a bunch of equity research software.
And I'm qualitative, I guess. I was an advisor and then I became a marketer and I'm a crypto and Scrt.
Cool, so what's Zyskind?
So Zyskind is a Cosmos SDK exchange for decentralized exchange-traded funds, both passive and inactive through Cosmos smart contracts. The whole idea is to build a we call it layer 0 to allow others to build the underlying ETFs. We're not building the actual ETFs, we're building the technology behind it.
Yeah, the main goal is to get every asset possible and give anybody the opportunity to manage their risk however they want with however much or however little risk they need, because right now, if you want to do that, that takes a lot of transactions to do, and it's just completely unnecessary. So we figured DeFi is definitely the way to fix those issues.
Okay, so when did you guys start this project? Tell us about your origin story and how you came to be.
Yeah. So the idea came about a year ago. I had been managing money for family and friends. Everybody was asking how to get into crypto, and I was moving money around a bunch of different chains, not just in IBC. And I was trying to look for a solution to solve this problem. And the only ones I found were on Ethereum, and I could only pretty much use tokens within the Ethereum ecosystem. So it's not really diversifying the risk if you're still in one ecosystem. So I started building it on the side, and started going full time on it about 6 months ago. So.
aren't available in Cosmos?
Well, one of them is the underlying assets. So like the biggest advantage to building a passive investment strategy, or even if you're going to build an automated active strategy, is the underlying assets that are actually held within that strategy. So with Ethereum, you're just constrained to the Ethereum ecosystem. You can use a token that of course are bridged, but it's a little complicated and it brings its own risk. So by utilizing IBC, it's a less risky process to do that, and plus utilizing other tools built out like XLR, et cetera, can actually bring in assets from pretty much anything. It's like less riskier manner.
Okay, so we're going to take some questions from the audience as well, so we'll make this an engaged thing. But I have one more question, which is, can you bring it back down to the tangible? And, if a user wanted to use this, what does this actually mean?
Yeah, so the whole idea is if somebody wanted to build their own automated like auto rebalancing ETF for the Cosmos ecosystem, they would go to DeFi and they would build out different composition, 10% of this, 10% of this, etc. So if it was Osmo, if it was Atom, Juno, etc. And then you would mint the underlying fund token on DeFi. From there, you can then actively trade it within any decentralized exchange that's compatible with IBC, so Osmosis, for example. And on top of that, if you ever wanted to actually just get the assets back, the underlying assets that represent that fund, you can still redeem it on the blockchain. So it's all collateralized by the underlying assets.
Why do we need a fund token?
So the idea with that is actually, historically in the ETF market, the way that most ETFs and passive investments work is institutional investors they create massive amounts of shares of the underlying ETFs, and they provide a market for the underlying ETFs in the active market, exchange traded funds. So the whole idea is we build the underlying tokenized method, you go anywhere, and then anybody can build anybody can provide liquidity with different decentralized exchanges. The goal would be to even go beyond that if centralized exchanges wanted to integrate it, since it's underlying just a token.
Okay, so we've got a question from the audience.
This question is going to reveal my lack of understanding, perhaps, of like the underlying technology. But I would love to know how. So you're not holding the native assets in aggregate, but you are effectively, like price-wise, you're doing that because you're having like the whole valuable fund. You're getting diversification within a dedicated asset class. Definitely, but are you actually? So you're not holding the actual native coins themselves. So like you're not holding an actual bag of coins. How are these pegged to those the value of those coins? Is that just how the IBC network works, and it's like, that's what it's relying on, or like?
So the underlying price of the
Mechanically, I'm just curious.
Okay, yeah. So the background, the architecture is actually built with ICA. All this is possible through ICA. On top of that, the
Sorry, what's ICA?
Interchain accounts. Interchain accounts. And then the pricing mechanism, which you're referring to, is actually utilizing what's called interchain clearing, which has been something I've been working on for a little while now, which is the same exact concept of interchain accounts, which interchain accounts allows for somebody to go and actually transact on another chain, decentrally on another chain. So I can say, oh, do this on Osmosis from another chain, IBC chain. So what is it? It covers anything that's ICA enabled. And it's not just coins, it's just messaging as well. So you can go and send a transaction on, let's say, Osmosis, on Juno, etc., right from your own chain. So that's the underlying architecture is built with that, and the pricing mechanism is built with what's called interchain querying, which takes that a little further, and it's instead of transferring messages, you're transferring data between chains essentially.
Very cool. So you didn't have a chance to talk very much. What's your qualitative approach to building out this product?
Yeah, so pretty much we need people to really understand how managing the risk is an important part of the crypto investment strategy. Because you look at what happened with Terra, you look at what happened with the overall bear market that we're in. If they had a way to manage their risk across multiple asset classes, you're probably still going to be losing, but not not just the people in the Cosmos ecosystem. The biggest issue that we've seen with all these Cosmos chains, amazing products, everyone's really smart. You're all too smart. Nobody knows how to speak to somebody who has no idea what they're looking at. So our main goal is to, which is one of the reasons why we're calling them decentralized ETFs, because anybody that really understands stocks is going to know what an ETF is. So we're bringing the similar technology to the Cosmos SDK so that it's a familiar product and everyone really can manage the risk in a familiar way.
Okay, so when are you guys going to have this product live for people to start managing their risk?
Yeah, so we just right now we just launched a private testnet a little while ago. We're building in public, so we like to build in public. So stage 1 is private testnet. We're testing out the interquerying module right now. From there, the plan is to go public testnet once we stage out everything. So we'll be launching in a couple of days our underlying messages, which will allow you to actually automate balance your underlying holdings plus invest in the underlying funds. And then from there, it's to launch our public testnet to everybody.
Okay, so how does someone who wants exposure to a basket of assets in the Cosmos ecosystem but isn't knowledgeable about any one token in it, for example, able to leverage your product?
Yeah, so for example, our product would be listed on Osmosis, right? Go to Osmosis and you're going to have the 10 Cosmos ETF. You're going to throw 10 atoms worth of atom in there, and you're going to be fully diversified.
Very cool. Here's something that's potentially exciting. Do that. So, okay, all right. What about NFTs? So, the whole conversation that we've had specifically with Sunny, is that we want to turn discrete assets into continuous assets. So what we could do is turn NFTs, put them in a sort of basket, and then start trading them. So what's your vision for that?
Yeah, so the cool thing about the underlying architecture is that you can actually do any tokenized asset. So NFTs. The biggest caveat to that is right now is fractionalization. So once fractionalization of the NFTs come in, then you can bundle your NFT with Atom, etc. And beyond that, you can even do stake derivatives. You can build whatever the case, whatever the tokenized asset. It doesn't be a tokenized asset. That's IBC. And then from there, you can even the goal is to even build, let's say, a staking ETF where you invest in an ETF across the Cosmos ecosystem. It goes and stakes those funds and it improves the underlying yield for those.
Cool. So yeah, just so I can get a poll of the audience, who knows what a staking derivative is? Perfect. Who knows what NFT fractionalization is? Okay, all right, that's pretty good. All right, so maybe we should just kind of go into the fundamentals just a little bit.
Yeah. So fractionalization of NFTs is the idea of just splitting up the underlying NFTs. So instead of, if in order to own one, you have to go buy, a basic NFT in full. The idea is to fractionalize that into shares itself. There's multiple different ways people are trying to do that, but that's the whole idea, is to fractionalize this so that somebody can come along and actually purchase an NFT. You do not have to purchase the entire holding, but still benefit from the underlying increase or decrease in the underlying NFT.
And there's a couple of companies out there, not Web3 companies, that they're selling art in a way that you're able to invest in art like a stock. So there's a couple paintings, Mona Lisas on there, but there's, imagine Mona Lisas on there, you'd be able to buy a share of Mona Lisa. We have the same vision where you should be able to buy a share of a piece of art in blockchain. Makes all the sense in the world, and fresh on NFTs is really awesome.
Thank you so much. So yeah, with the idea of fractionalizing NFTs in the future, I guess you would be able to take a home and then fractionalize it into shares of a home, and then you have some sort of timeshare sort of deal. Yeah, what are your guys' outlook into the future about what's possible with this sort of thing?
Anything you can slap a token on, you can make an ETF out of. That's the goal.
I'm very bullish on fractionalization. I personally believe it brought a lot to fractionalization when it was introduced to the capital markets, brought a lot of liquidity for individual investors that just wasn't there. So it's very, very beneficial. And beyond that, products that are going to be able to be built with fractionalization, like BFund, only furthers the ecosystem. So it's exciting.
Okay, so why do we need decentralized ETFs? Why are ETFs not sufficient as they currently are?
Well, a couple points there, things there. So the biggest one is passive investing is the biggest way to invest in the market, and it's only growing substantially year over year. Beyond that, a lot of major liquidity and underlying sources of funds, so like endowments, institutions, etc., rely on passive investing vehicles in order to actually invest in the capital market, whatever the case may be. So there's a lot of people siloed from Web3 because there aren't these underlying financial assets yet in Web3. So the possibilities are really endless once you start introducing those financial assets rather than being ETFs.
Yeah, and building on that as well, I know this is a big product for those who are about financial advisors and those who are managing retirement plans, 401ks. A lot of people, they want coverage on crypto, but these advisors, they don't have a risk profile. They don't meet their Sharpe ratio. Crypto's not in the spot for them to invest in the way they want to. ETFs can make that possible because they can go in and make whatever ETF they think fits the risk profile for that specific investment account. So that's really where we can see that flourishing.
And what's really cool is with Alt-Z, which I think they did talk on here, we can actually eventually add the ability for somebody to manage somebody like a separately managed account with Alt-Z, so then a financial advisor can just manage your wallet for you trustlessly.
Yeah. Are you guys familiar with Alt-Z? Anyone? Oh yeah. Okay. So right now Alt-Z is just a feature when you're staking with Cosmos chains. What you can do is, like, let's say you delegate authority, like specific permissions to someone else, and that lets you like restake, for example, like automate your dividend or reward reinvesting. I don't want to call it dividends. That's not the right term. Cool. So yeah, actually, I want to go to your backstory. So one of you co-wrote the EIP. What is it? What is it?
Interchain Purdy?
Sorry. I remember you told me that you co-wrote ERC 721, or was it that different set? Can you go into specifics?
Yeah, no, I did. I helped build out the Interchain Purdy module, which is the next big upgrade to my personal opinion, I guess you should say, to IBC, which will allow the ability of people not just to transact but actually query data right on chain.
Okay. All right. Cool. So let's talk about the end user, right? At the end of the day, this is supposed to benefit people who have savings in like a fund, right? They have a financial advisor at a bank, and they want exposure to crypto. Is that the end user that's going to be able to use this, or is it going to be another crypto native that's not for another couple of years?
So the base idea of defund is not necessarily targeting the end user. It's giving people the tool set to build funds in the way that they see fit. So for example, you could be a VC and build a fund based on your investments and allow people to invest based on and track your portfolio. You can also build it and manage for 401ks. You can also just be a retail investor that I want to throw $100 in the top 20 crypto. So it really hits a broad range. And also from an institutional side, it adds another aspect of risk management on a larger scale. So it really is up to the end users, more like the intermediary. Think of us as like Stripe in a way, but instead of doing payment processing, we're throwing ETFs and making it easy for it.
Okay. So just in a way that I could stake with a validator now and then use Alt-Z to have somebody else reinvest for me automatically, I could do the same and just like plug it into your ETF and just like select what risk profile I have and then get passive earnings from that.
Yep.
Cool. Well, there we're done with this fireside chat unless anybody has any more questions for our speakers. One second. Oh.
Yeah, a minute ago you mentioned combining fractionalization of NFTs to represent real-world assets. How might you create an investment type vehicle by combining these different things you've mentioned today, like creating your own asset profile? I mean, it's these risk profiles and what the assets are, and then actually representing ownership with a fractionalized NFT.
So if it's tokenized, then you can not natively actually integrate it into the DeFi. The goal, of course, with any tokenized asset is to natively integrate. But as long as it's IBC-enabled token, it can be integrated. So in the case of fractionalized homeownership, real estate, etc., you can implement that into a portfolio. It's an underlying tokenized asset.
So you take like the deed of the house. What do you do? You take the deed of the house and what do you put it in trust and then?
I'm not too familiar on the real estate side, but I think that's the idea.
Yeah, I'm so curious about that.
Yeah, I think that you get an NFT of resemblance of the deed, and then the ownership of the house is underlying the deed. So, from my understanding.
Yeah, forgive my language, I'm going to use a bad word, but is there like a regulatory component you have like with this? Because I know it's decentralized, so it's kind of opposed, but when you talk about institutions, aren't they kind of like forbidden from participating in these things because there's like no like regulation approved yet?
There's two components to that, correct. The regulation is not there yet, as with any product right now that is decentralized. The hope is that regulation will come, and what that does is actually bring in a substantial amount of institutional-based investors. And then once that happens, what's the next problem? It's that these institutions don't have the resources, or right now the tools aren't built, I should say, to actually invest in different vehicles. So one of the ETFs, which is more than 50% of the capital market right now, which most of these institutions are investing in and now moving through. So it's pretty much preparing before that happens.
So I'm aware that there's fractionalized NFTs for like alternative assets beyond just like blue chip NFTs. You can fractionalize things like there's one company called Koya, and they do like whiskey, watches, stuff like that, like run their own assets, and then they insure them, and then like the owners of those assets, you know, if they end up selling the asset as it's gone up in value, is that like those kinds of like fractionalized NFTs and real world things? Would that be something that you would be putting on the platform?
Yeah, that's the goal. You know, we want to have it across the multiple asset classes. Like for example, I like what Comdex is doing a lot. They are creating synthetic commodities, and anything that can be pegged to something else would be great to really diversify your portfolio. So you can get a gold synthetic mixed with Bitcoin, and then you can say that's your stable ETF right there. Roll with that. So once again, keep on coming back to the same point. Anything that you can slap a token on, that's something that can be an ETF at some point.
Any more questions?
Going back to the regulatory issues, how do you deal with custody? Because most institutions are going to have to use a centralized custodian, regulation-wise.
Yeah, so right now our focus is of course on the DEX just because of the regulation and integration side of things. The goal is to eventually integrate with centralized exchanges, etc. Because it's just a tokenized asset, the integration should be as seamless as adding in any other token into the underlying centralized exchange. So just how you go, you deposit from your wallet in, let's say, out in the Cosmos Hub into a centralized exchange. The goal would be to make that a seamless process like that. The biggest competitor to us is Set Protocol, which is on Ethereum. As I said before, that was one of the things when I was looking for something to solve this issue for myself. I looked at it, it just didn't solve the issue. be in the newer ecosystem, so it's not really diversified. So I started scratching my own itch.
And that's the reason why we picked the Cosmos SDK to start, because we saw the potential where we can branch out to every chain, because we hate how everything's working in parallel and not in the web. And Cosmos gave us that opportunity to really branch out with Bridges at the time now, with Axelar and a bunch of other great projects. It's given us the opportunity to really accomplish the goal of bringing it every day. So, yeah.
So you are going to integrate every single asset, including others in the other ecosystems like Avalanche, Solana, Ethereum, all the L2s, including everything that's in the Interchain.
Like you said, you're not diversified if you're on one chain.
Yeah, sure. Okay, and we are out of time. Thank you guys so much for your time and attention. Hope you got some alpha from this.
Next up on the stage, talking about slingshotting us into Cosmos, is Mr. Zach Cole. Zach Cole, come up on stage.
Hello. How's everyone doing? Lively crowd here in Austin today. Woo! My name is Zach Cole. I'm the CTO and co-founder of Slingshot. And today, I was going to demo a really cool integration between Slingshot and Osmosis. Unfortunately, I'm not able to do that at this time, so I'm going to take you on a verbal adventure into the cosmos. So a bit about myself. My name is Zach Cole. As I said, I'm CTO, co-founder of Slingshot. We're a decentralized aggregator. You can go and exchange all your tokens. I'm not really an avid gardener. I'm not studying martial arts, but I do own a 2007 Space gun. Yeah. So Slingshot was founded in 2020. My co-founders are Scott Lewis, Clinton Bembry. Scott wishes he could be here right now, but he has kids back in Nashville, so he went home. I don't know why he came out at all. We launched in March of 2021, and since then we've broken 1 million trades, and we're past $2 billion in volume. People like to say some cool stuff about us. We recently raised a Series A at the end of last year. It was a $15 million raise. So we have an aggregator. What we want to do is kind of provide some of the conveniences of centralized exchanges that you may be used to, such as candlesticks that are more advanced than just your standard ones you would see on, like, any of your Uniswap interfaces. We have like a nice trade tape. I have some more photos I'll show you in a bit. And we also have like some social tooling. So we have like a chat box, and we have avatars. If you have your own NFT, PFP, you can set that as your avatar in the chat. Right now we're across 4 liquidity zones, what we call them. They're essentially chains. So that's Arbitrum, BNB, Polygon, and Optimism. We have over 20 DEXs integrated, and that ensures that our users are getting the best prices on whatever asset they happen to be trading. We have over 10,000 tokens that can be traded. So what we do is we aggregate all the liquidity pools for a given asset. We kind of like bunch those up, and we'll break an order down into smaller chunks. So that way the fill is getting the best liquidity from multiple liquidity pools. That could be from multiple markets. So one trade could come from Sushi, it can route through Uniswap, and it can route through intermediary assets as well. We have our own search algorithm and like what we call 2-hop, which is really multiple. It's really in-hop, but I'm not really here to talk about the nerd stuff. So 10,000 tokens across those liquidity zones. We have real-time pricing. We've developed our own algorithm that calculates the price of a given asset using only on-chain data. We created our own indexer. We're not using any third-party APIs or oracles. That's just an algorithm that took months of crappy work to figure out and perfect. We have a marketplace. We launched our own NFT series that represents Slingshot, and it's actually done pretty well through the bear market. I think that the NFT floor is up like 40x. Unfortunately, obviously, I'm not allowed to take part in that trading activity. Otherwise I would, but we all know what happened to that guy at OpenSea. Social's pretty cool. It's really interesting to see a lot of people from all around the world just pretty much talking about their shitcoin trading. And it's also kind of cool to see what people are, like a more retail-focused audience is kind of interested in purchasing and trading at the time. So what's next for us? Osmosis integration, which is completed. It took us a few weeks to integrate. It's not EVM compatible, and all of our previous integrations have been EVM-based chains, which made it a little simpler to integrate. But now we're expanding into the Cosmos ecosystem as well, because I think that it's the next thing. Kind of bullish on app chains, app-specific chains are pretty interesting in terms of the use case. So that's, right now we support 52 tokens. Osmosis is the native asset, obviously, Osmo. And you can just access it and interact with Slingshot through the Keplr wallet, just like you would Osmosis itself. And it's kind of like a screenshot of what you can see. We have a trade tape there, basic trade widget. And we have markets as well. So it's kind of similar to CoinGecko, but it's just a much more primitive version. And that's calculating the price, the volume, the change, the 24-hour change. And that's all calculated using on-chain data. So we're not like pulling from CoinGecko or Etherscan or anything like that. What we do is we just set up a bunch of nodes, and we're just constantly on every block pulling all of that data, indexing it, shoving it into a huge database, and then post-processing all of that before we present it. So sorry I couldn't give you guys a demo, but you're welcome to try it out yourselves. And that website is slingshot.finance. So any questions? There's not a lot of stuff. Hey there, what's up, man? I'd say like our competitors are more like 1inch and Matcha, kind of, but most of those folks aren't really focusing on Cosmos, they're really EVM based. So I feel like we're probably going to be one of the first DEX aggregators to really support a lot of Cosmos, like within the Cosmos ecosystem, because we're also integrating with Ethmos, and after that, we'll see. Maybe Juno, I don't know if they're. How do you guys feel about Juno? Yay? Nay? Yeah? There you go, buddy. We got an optimist here. But yeah, if you have any suggestions as to what you'd like to see us to integrate, just feel free to hit me up on Twitter or Telegram or Craigslist, whatever. Charlie.
Zach, do you have to have assets on each of the chains if you want to benefit from trading across them? So like, let's say I have like a USDT on Ethereum.
Yeah.
Or on whatever.
If you have USDT on Ethereum, you're only going to be able to trade. But we do have a bridge integration that we're going to release probably within the next month or so. Right now we're focusing primarily on a mobile application, which includes a wallet as well. So now you can trade from the convenience of your phone. But yes, if you want to trade on a particular chain, you need to already have assets there. So this may not be a platform that's suitable for complete noobs that aren't experienced with some degree of interchain, degenning. Yeah. All right. Well, my name is Zach Paul, and I'm at 0xZach on Twitter. So hit me up and we'll get a beer.
All right, Zach. Thank you again. Hopping on down to the Osmocon 2022 stage. It's been a long day, guys. It's been a great day. We've learned a lot for all you back home watching on YouTube or whatever. There's 1 million people that were outside. Business deals have been going on. So much stuff, so much fun stuff. We've made it. We're at the last speaker. Last but not least, oddly, Guy, founder of Scrt Network. Guy, come on down. Welcome to the Osmocon stage. Damn glad to have you. Damn glad, Guy.
Hey everyone. Great to be here. Thanks for Osmo for having us. This is technically the closing ceremony, I guess. I'll do my best to tie and be on subject, but still, the thing I know best is Scrt and Interchain, and I guess most of what I want to talk about is how we as Scrt kind of interconnect with Osmo, interconnect with the rest of the IBC network, and where I think the Cosmos ecosystem is heading up. Is there like a ticker or anything, or? Got it. All right. So, how many people here know what Scrt is? Know about Scrt? All right. Seems like everyone. So I'm gonna skip that. Technically, Scrt network. First L1 in Cosmos that had Cosmos smart contracts, but that's not the interesting part. The interesting part is that in Scrt network, the contracts are not just smart, they're also secret. What does that mean? That means that all inputs, state transitions and state in general, and outputs are completely encrypted, but it's completely programmable, right? So there are applications, there are parts of the, let's say, the data in applications that you do want to reveal. For example, let's say there's a voting application where people vote with their tokens. So you don't want the votes to be public, you don't want people to see who votes for whom, but you do want the tally to be public. So that's like been done like 10 times already on Scrt. That's very easy to do. And some of it is private, the vote, some of it is public, the tally, as decided. And it's up for the developers to decide how they develop their applications. Just a little bit of numbers for those who don't know. Scrt has 80 validators, that's the max right now. We're going to increase it soon again because it's been kind of popular. So it started with 50 and continuously been increased with governance votes. About 60% plus of the tokens are locked in staking, which brings it to about 100,000 delegators and about 200,000 secret accounts. But the thing is that Scrt is slightly different. I think other than Atom, it has the most centralized exchanges listings. So there are probably many, like hundreds of thousands of accounts just on like Binance and Kraken and anywhere and Yobi and like everywhere else it's traded. But here's what I want to talk about. Here's how it ties, I think, to the whole interchain kind of vision. So at Scrt Labs, which is the company kind of like building the infrastructure layer of Scrt, we've been kind of shifting gears in the past few months. We've seen several applications that have pretty much kind of tested the maximum capacity of the network, and we said, okay, we gotta work extremely hard into making sure that by end of this year, we can not just cater volume from Scrt internal applications, but from outside of the Cosmos. And so we put all of our effort into infrastructure, and last month we did an upgrade called Shockwave Alpha. Shockwave Alpha focused a lot on scalability. There's like crazy, in my opinion, like 500 plus X speed up for queries. There's state sync for the Cosmos directory, and there's interchain accounts, which we are right now utilizing with things like NFT bridges to other Cosmos chains and beyond. An even bigger upgrade that's coming in the next couple of months is Shockwave Omega. In fact, Shockwave Omega is not going to be like a one-time thing. It's going to be split to several upgrades. Some of the features are not announced, so expect that soon. But it's going to be split between now and the end of 2022. And it's going to have Cosmos and V1, which is obviously the most important thing for us to get, just to kind of be like on par with all developers. There's moving from WASMI, which is the interpreter that we currently use, to WASMer. We call it WASMer SGX because it's going to be WASMer that lives inside of the enclave. That's actually very complicated. That's a lot of work, but it's coming sooner than expected because we already kind of like finished all the hard parts. Like now it's like the easier, quality of life, mechanical, technical parts. And another thing that I don't think we've ever announced, but we've taken in the last month Mental Mint. People know what Mental Mint is, like Terra uses it. Right, so we took Mental Mint from Terra, and Terra did, like, look, putting collapse aside, anything else aside, Terra did an amazing job being able to serve more queries and more transactions than all of Cosmos combined. Let's give them that credit, they deserve it, they worked very hard. So we took Mental Mint and we completely adapted it to fit on Scrt, and now Scrt compatible Mental Mint is ready. It's been completed 2 weeks ago, give or take, and it's being deployed. It's going to take time to set up the nodes because these are kind of like archive nodes, they take time. But for each node that we set, we benchmark it, it gives 3x the capacity to handle queries. And it's horizontal scalable. So the more nodes that we put in, the more queries we can put. And at least from a query perspective, like that kind of solves like all the problems, which is really, really cool. And why are we putting so much effort into infra where we want to cater not just Scrt, we want to cater Cosmos, we want to cater Osmosis. We can't like be the one thing for, like the one chain for everything. That's not the vision we believe in, that's not why we chose Cosmos. We chose Cosmos because we believe there's a place for each chain to do what it does best. And what Scrt does best is provide privacy and secrecy as a service. And so, some of these things exist today, some of these are forward-looking, but in my opinion, anything that's here is going to be done in the next 6 months. And if some of these are not being developed and you're developers and resonate with it, then these are things that we want to see build up. So first and foremost, it's private transactions and swaps. That's not the focus of Scrt Network, but it seems to be the one thing that we keep getting asked about. And there hasn't been a conference or a conversation in the last few months where I haven't talked to a Cosmos team who isn't even building on Scrt. And they didn't tell me that, hey, you know what? We're actually using Scrt to be able to make our Cosmos assets private. And to me that was like a huge shock because it's private, so we don't really have a way to understand how many users use that feature, but it seems quite a lot. So private transactions and private swaps, you don't need all the stuff that I talked about. You can do it right now in Scrt. There's IBC, so you can take Osmo, for example, and you can move it to Scrt and then wrap it. And then when you wrap it, it turns into something called S-Osmo, Scrt Osmo, for example. And that works very much like how Zcash shielded transactions and shielded assets work. Essentially, once you move into an S token, a Scrt token, then everything you send and transact and do is completely private. Obviously, this is still problematic for 2 reasons. So, A, the UI sucks. It's really bad. And I hope that with Interchain accounts and with contract-to-contract IBC, which is the stuff I showed you we're working on, we'd be able to do, and with some good UI work and integrations, we would be able to make a much better job at it. Like in my vision, like you go to Osmosis, you do a swap, it doesn't matter which 2 assets you choose, all you have to do is like tick some box that says make this private, right? And that's it. You don't have to worry about anything else. So this is where we are now, but that's where we want to get, and that's where I hope we'll be by the end of the year. The other aspect that's really cool about Scrt and only available on Scrt is actual on-chain randomness. So there are now good cryptographic solutions to do off-chain randomness. And those exist, those oracles exist. but they're still off-chain, they still have the trade-offs like anything. But Scrt, because of its capabilities, if you're building on Scrt right now, any application that's been built on Scrt and uses randomness, and that's any NFT mint, any game, so that's at least like 50 applications that uses it, all they have to do is write one line of code and they drop on-chain randomness. Part of the consensus, part of the same security model, you don't have to go out. And we want the rest of Cosmos and beyond to enjoy the same level of quality. So, there was a talk today about what more NFTs on Osmosis. Imagine that for the mint, they can just with one line of code through IBC, just draw that randomness and just use it. Never technically exit Osmosis even. I do expect that to be the first application. We have some grants that people are looking into it, and there's a need. So I expect that to be in Q4 for other chains. So other chains will be able to consume that, and hope I'm not sharing something I'm not supposed to. But we've been talking to Andromeda, which I think are doing phenomenal things, and they're putting building blocks into their GUI, into their contract creator. So imagine you would just be able to put the box that says, get true randomness in your application. This is really cool. Won't go into detail, but there's a lot of things that we can do to actually improve crypto in general. Any launchpad, any project that uses crypto today, many of them require to KYC. It's a bad experience because you have to do it multiple times, but I don't know if any one of you has been on the other end of the KYC side, because I have been. Our lawyers, our legals forced us to do KYC, our banks forced us to do KYC. It sucks, but when we do it, it's scary as fuck. Because on the other end, you just get to see everyone's passports, everyone's personal data. I have no idea how it's stored. It's super, super shady and scary, and that's not the way it should work. So there should be a way to do privacy preserving KYC. Do it once. Give you an NFT or a token that can be reusable in other application, and that's it. And to me, that's something I'm very excited about. And this is a bit complicated, but you're going to hear a lot about this. There's actually a super well-funded team building this and utilizing Scrt capability. And that's the idea that you can do trustless on-chain wallets on Scrt. And the reason you can just do it on Scrt is because in Scrt, on a smart contract, you can keep private data. That private data could be a wallet, a private key of a wallet. And you can use that in so many ways. For example, you can set a contract that is an on-chain wallet that you can put whatever access control policies that you want. For example, my fund manager, right, at Scrt Labs. Maybe we wanna make sure that he can't do more than 10K dollars worth of transactions a day. That's easily programmable with something like that. Maybe we want to make sure that they can swap only on Osmosis, but on other chains, maybe only on those pools. So we can put and bake into that wallet whatever access control policies that we want. And even more importantly, you can actually use what Scrt provides combined with threshold signatures to actually just get in what in my opinion is a more secure wallet. So you can have a wallet where Scrt is one counterparty that has one part of the one signer in the multisig, and then the user is the other signer, and it gets really more interesting and complicated going down. But I think the use cases of these are basically infinite. So I'm gonna skip the other things, but I think this is what I kind of want to finish with. This is something that, I don't know if it's technical or political, but I think this is the right place to say this. Cosmos, in my opinion, is, and obviously I'm biased, but in my opinion, it's the best ecosystem out there. It has the best builders, it has the best model with sovereign chains that interconnect with IBC, it has the best UI and UX, and it's been improving day in, day out. And by the way, I think all the credit goes to Osmosis here, because Osmosis really put the bar higher when it comes to making great user experience. But we are still extremely small. Let's not kid ourselves. Cosmos, is, compared to the other large ecosystem, even putting all of Cosmos together, we're just not big enough yet. And to me, IBC, let's say V2, where it's contract to contract, but more than the technical side, just being able to get together like this and thinking together like how can we build better user experience that goes from one chain to the other in a seamless way, that's our way to beat Solana, Ethereum, anything else. That's the way to make Cosmos the internet of blockchains, the Web3, the basic Web3 go-to place. So I'm going to stop here and just thank you everyone.